China and the support that's come through. Pretty significant support, whether it gains traction, whether it really lifts. We saw the property stocks lift on the back of iron ore is higher on the back of those measures. So we're watching the mining stocks in the UK as well. We are 10 seconds away from the open this Friday with European futures pointing to a sluggish start as we look for those catalysts. Maybe it is Nvidia next week, currently pointing low by 0.3. Let's see how things open. With the earnings story still in focus, Richemont as well. And we watch as well HSBC. That's going to be interesting on the Ping An news. What's standing out to you, Guy, at this point?
Not a lot. So let's just switch things up, talk a little bit about points. Cole Smead's having a good morning. Unicredit looks like it's a little bit higher first thing.
Yeah.
He was mentioning that as one of his key shareholdings. Unilever, AstraZeneca, Unilever, BP, Rio Tinto, BNP Paribas, where the gains are coming through. You would have thought that actually that would be reasonably positive for the London market. You've got this Haleon story as well coming out of GSK, which is something we need to bear in mind. Tech looks like it's a little bit soft. ASML is certainly trading a little bit lower. Novo, I talked about the Danish market having a good week this week. Nova's a little soft as well, so that's going to add some points onto the downside. But I'm trying to see if there's a read across into luxury. So LVMH is a little softer this morning. HSBC is also a little softer as well on that Ping An story.
Just looking at the sector breakdown there, not that many sectors in positive territory. So is this sort of downdraft to the picture this morning? We do have BT Group a little higher this morning, but so telecoms is higher.
Squeezed higher yesterday, much to the.
Was it 17%?
Much of the. It made the CEO very happy.
She's front page of the FT. Yeah. She likes squeezing the shorts.
And very new in the job and a friend of the programme. So we look forward to speaking to her when she has time for that. Technology, the worst performing sector on the stock 600 this morning. We are down on tech stocks, ASML and the like.
Maybe that's a yield story. Yields were up a little bit in the session yesterday. The higher for longer narrative from those FOMC officials. H&M performing very well today. One of the lead gainers adding, 2.5%. This was flagged, of course, by Joe Easton on some of the details around that story. So we keep an eye on that. HSBC, as you mentioned, Guy, currently just down 0.2%. So Ping An with that 8% stake. Not a huge move, and it's how they unwind that holding, of course, that's going to be watched closely. Haleon currently down 1.3%.
There's a little bit of a so the US market continued to fade. As after the European markets are closed yesterday. So there's a little bit of catch-up maybe coming through into these markets as well this morning from that position. So I think you just got to bear that in mind too. You've got the yields ticking a little bit higher too, so that's a factor maybe we need to bear in mind. Maybe the Schnabel comments are having maybe more of an impact there as well. Richemont is open, I understand.
Yes, and it's on that graphic you can see on the screen. It's the top of the stocks 50 top performers, so it's moving higher, up by just over 4% this morning. So beating estimates, certainly in some regions and overall. And then a new CEO, also a highlight from the earnings report that we got.
So is this a sense that this is a strategy change? Because the fact that the former CEO is going to become the chief operating officer, i.e. managing the business on a day-to-day basis rather than setting strategy, would seem to imply that the boss has been brought in to maybe kind of finesse the strategy in terms of what they're doing with the business. The sense seems to be this morning that maybe he will focus more on the hard jewellery side and push that side of the business a little bit more. So maybe this is a sense that there is a need for a strategy rethink here, and you are going to see maybe some upside on the back of that.
Well, investors are really enjoying it right now, up 5.5%, whether that's the executive changes and the strategy expectations or the fact that they met those estimates and performed particularly well in jurisdictions like Japan. The US was also pretty good as well. China a bit more of a drag. But let's get more analysis on the Richemont story, given that stock is up now 5.3%. And bring in Bloomberg's consumer goods reporter, Dasha Afanasieva, who's been across this story for us all morning. Dasha, a shake-up at the top. That's what stood out to you the last time I spoke to you. Give us your take right now on what that could mean in terms of the executive change, the CEO, for the strategy for this business going forward.
Morning again. So as they explained, this change is about really focusing in on the biggest jewellery division that's growing a lot faster than luxury watches. That's because the new chief executive is Nicolas Boss. He was the chief executive of Van Cleef & Arpels, which is the jewellery brand that has those famous bracelets, the little crosses that everyone has copies of. And but what's interesting and why I don't think it'd be a complete departure, it's more like a sort of doubling down on strategy, is that the current CEO, Jérôme Lambert, is actually sticking around. He's going to be chief operating officer, reporting to Nicolas Boss. So I think it's the message that, you know what, we're going to focus on jewellery, and that's our unique value proposition, because if you think about the other luxury goods companies, they are not as exposed to luxury jewelry. Obviously, LVMH has Tiffany, and that was a long-running saga, but it's not the specialism of luxury jewelry.
Okay, so we'll see where the CEO change takes us then, Dasha. What about the China story? I was looking at the regional breakdown that they give us in the sales report here, and you get a number for Asia Pacific. I'm not sure if we get a breakdown specifically for China, but it is China that has been a source of concern for many investors when you look broadly at the luxury space.
Absolutely, and I think that's been the concern here. They've missed in Asia Pacific by quite a margin, and it sort of echoes what other luxury goods makers have experienced, that there was this big burst of activity after the pandemic, Chinese luxury consumers snapping up lots of designer, clobber and jewelry and watches, and now that's dying down. And one wonders, how do you stabilize? Obviously, in a year's time, you again will get rid of that annual effect, so there'll be some kind of stabilization. But I think there are question marks about what that will look like. Although, it is interesting also that there's sort of a splitting off. The ultra premium, the watches above $3,000 are actually doing well. So it's not that sort of the ultra rich who don't have money to spend. It's just the question of what will be the longer term trajectory.
Okay, but is there a sense that the epic run that we've seen in the watch business is now over? Is this confirmation of that? You're seeing it elsewhere. Johann Rupert's talked about this in the past, the fact that we have run out of steam on that trade. Is this just further confirmation that narrative that came out of what happened with crypto, came out of the pandemic, has now run its course?
I think for the time being, that's fair, and that definitely seems to be why the company is also pivoting and putting less of an emphasis on watches. But it's not like it's not still, and you also saw in the UK retailer, the Swiss watch retailer, having a bit of a torrid time. The one that sells Rolexes. So I think there's definitely a sense of that. But it's just because it was so high before, it was such a strong run, and it doesn't mean it could still have sort of moderate growth. But that is sort of what separates Richemont from the other big luxury players.
Yep. Dasha, great stuff. Thank you very much indeed, Dasha Afanasieff, joining us on what is happening with the Richemont story and the wider impact out into what is happening in the luxury trade. Watches of Switzerland actually popping higher on the 16th, traded through quite nicely this morning as well. It's up really 22% this week. I just want to double check my numbers on that, but that's what it looks like. So some strong performance maybe coming through from the watch sector, despite what we're hearing maybe out of Richemont this morning. Is there a read across into LVMH? Let's find out. Let's take a look at the core six and figure out what is happening broadly across Europe, encompassing everything. So you've seen Novo come back. ASML, we're seeing some weakness there, so luxury is certainly on the back foot this morning. LVMH, not much read across. So LVMH, fairly quiet, you could argue, given what we're hearing from Richemont this morning. Let's figure out what other stocks we need to be watching. Joe Easton, here with the details.
At the watches, Guy, as you mentioned, most of the strength in that report did seem to be in jewellery and excitement around the CEO, but you also mentioned Watches of Switzerland there. We had the earnings from them out this week. That stock up 20% for the week, as you mentioned. But the fifth best performer across the entire market is Swatch, suggesting that people do like the watches numbers out of Richemont today. It's not all about jewellery, so we are seeing the watch stocks gaining. Richemont itself up 6%. That is the biggest gain since January for that one, so a big gain for the stock, but we're seeing a feed through into the timepiece stocks today, suggesting that that is also a strong part of the market. Quite an interesting dynamic with the CEO coming in, focusing on jewellery. Then we'll look at earnings, couple out of the UK. So we go from fancy watches to diamonds. We got Petra Diamonds, this one actually declining, not as much diamonds dug out of the ground, and profits actually declining at that company today. Then Land Securities in the UK writing down the value of their UK real estate by around £600 million, according to their statement. It's a big loss for them. Then over in France, we got NG and also Score, both of those declining. Now, NG, this is in the utility space. A warmer winter was not good news for them, according to the statement. That might be good for some of our household bills, but not good for the company. Now, Score, this is a Lloyd's of London insurer, a really strong part of the market, but they have seen a decline in net interest income, so that one getting hit hard on the Paris Exchange. That's the worst performer on the Stock 600, or one of them, a few moments ago. So that one down over in Paris. Then we're going to bring you Aker BP. This is a very single stock story. They've got a lawsuit from an investor claiming that they've lost money on a refinancing deal. The company over in Norway is denying it. They're going to dispute it in the courts, but that is weighing on the stock, and we're down 1% on that one today. Then in terms of deals, plenty going on once again in this space. You mentioned a couple in the build-up. There's Haleon there, down 1%. GlaxoSmithKline also slipping slightly, exiting its entire stake in the maker of Sensodyne and Advil. So those two both declining today. HSBC, you mentioned Ping An potentially looking to offload shares as reported by the Bloomberg Deals team. That one pretty much unchanged. The Rent Group have brought up, this is interesting, it's car parts, but the interesting thing with this one, it only IPO'd a few months ago, and an investor already looking to sell shares on that one, and it is coming down. It's down 2%. Surprising to see a stake sale in that one so early for that firm. Then we will look at a couple of morning calls. We mentioned H&M in the stocks to watch. Now this one doing well, up 2.7%. RBC recommends buying that one instead of Inditex, the Zara maker. It's outperformer, 200 Swedish krona price target. It's at 180, so potentially some more upside to that one. Finally, a quick look at chemicals, because Lanxess over in Germany, this one is getting hit on a downgrade by Exane BNP. They think that this is a bad cyclical trade at the moment, and the producer has just told me in my ear that Jefferies has also downgraded, so it's a double downgrade for Lanxess. It's one of the worst performers in Germany today. It's down 4% now, actually, so Lanxess getting hit on the DAX index today.
Joe, thank you very much. Joe Easton from our equities team with all you need to know about the stocks on the move this morning. And it is very clear that luxury sort of steals the limelight, doesn't it? With the luxury sector, consumer products and services broadly, but within that, the luxury sector doing really well. Richemont up by just shy of 6.8%. Swatch, Burberry, Moncler, LVMH all going higher, not by as much at all, but certainly being lifted. It's interesting that the boss who's stepping back a little bit and major shareholder saying some really interesting things about the Chinese lockdown, saying there's nothing wrong with the Chinese market. I think people were psychologically affected by the very strict lockdowns, which is an interesting take on what ails the Chinese consumer right now.
Tom's probably got a better view on this, but it does seem as if the Chinese consumer has been did not react in the same way coming out of the pandemic as other consumers have, who have come out and bought tickets to concerts. I'm not going to mention which tickets to which concerts. Tom is looking forward to his. His participation in that process. But the experience seems to be radically different to what we've seen elsewhere in the world.
So they didn't have stimulus checks. They didn't have furlough. And Shanghai, the beating hub, the financial centre of China, locked down for 3 months. Locked down for 3 months. Literally bars on doors. So if that doesn't impact your confidence, what does? So you're not getting that additional stimulus. You were locked down in a city where you would one of the least expected in terms of where you're going to, the most international city. And then you have the real estate crisis as well. So the turn has been dramatic in terms of the sentiment of the Chinese consumer. I can't really overplay that. Post-pandemic, from the pandemic to now, there's been a complete reversal. And I speak to Chinese friends on the ground who would always just talk about the next holiday, the next car, the next thing they're investing in up until the pandemic. And that was almost universal across the upper middle class in Beijing and Shanghai. That is completely flipped on its head now.
That's incredible. And it's lasted a long time then, because, this is history now. And yet this effect on consumer appetites still lingers.
I think that's a really good point as to how long this lingers. And that's clearly feeding into the urgency of policymakers meeting today to try and push through some of those changes, because they're seeing that this is dragging on. And I think, to your point, that's a question mark, isn't it? When does that turn back to a more constructive outlook for the Chinese consumer?
Yeah, and whether policy can do anything to counter that kind of sentiment is really fascinating. OK, we will be back with more on China, more on these markets, more on the luxury stocks gaining this morning. Plenty more to come. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
The U.S. economy is chugging along pretty well.
We've had good, healthy markets for quite a while.
There's 1,000 things that can go wrong tomorrow, but right now everything's in pretty good shape.
I think the chance of something going wrong is higher than people think.
Where it'll be in 6 months, how much of that slowdown we see in the bottom quartile, we have to watch the data very, very carefully.
Whatever the world is pricing it for a soft landing, I think it's probably half that.
Right now we have a no landing, honestly, a 2% growth rate, because you can't say it's a soft landing.
There are a lot of inflationary forces in front of us that, may keep it a little bit higher than people expect.
What the Fed is doing with rate structure is having the impact they want. On the other hand, the economy's kind of there, and now we got to be careful we don't overshoot the other way.
I think, they are doing the right to be patient right now.
JP Morgan, B of A, Goldman Sachs, The View from the CEOs. We've been speaking to them all this week in Paris. Interesting to get the kind of different, the kind of the nuance, the subtlety in terms of the differences in their opinion. Diamond's a little bit cautious. I have to say, Brian sounding much more positive on the economy that he sees in front of him. But that's what makes a market right now. And the market this morning, reasonably flat, not really giving us a sense of direction. Just want to point out that Norway is closed today. We were talking about Aker a little bit earlier on. That was yesterday's price, so just be aware of that. But the tricky thing right now is we're getting conflicting signals out of the global economy. We're certainly getting conflicting signals out of what is coming out of the data in the United States. Nancy Curtin is the CIO of Alti Tiedemann Global, joins us now on set. Jamie Dimon sounds cautious. Jamie Dimon's worried about inflation. Jamie Dimon's worried that markets look a little bit toppy. He says there's a lot of happy talk out there right now. Do you think he's right? Do you think Jamie's got a different time perspective on some of these things?
Look, Jamie Dimon runs one of the biggest banks in the world, and he's got to think about the upside and the downside and the lending market as well. But we have to run portfolios on behalf of our clients. And we moved overweight in equities last year, believing that the markets were too cautious and that we would achieve a soft landing. That is still our view. And actually, even though the Fed has not cut interest rates, liquidity is pretty good at the moment. Yep. Look at the corporate credit. Look at the equity market. I think it's been a pretty positive beginning to the year.
How worried are you about the tail risk, though? Because the markets increasingly feel like they're don't see those tail risks as being germane anymore. The risk that actually inflation stays sticky and the Fed and other central banks maybe can't do as much in terms of cutting rates as maybe we had anticipated. We're pricing 2 now. Does that go to 0? And what about the risk on the other side, which is that actually you've got some warning signals out there flashing a little bit, maybe not red, but certainly amber. Walmart yesterday talking about the fact that even kind of high middle income shoppers are trading down. You got Deere yesterday talking about the fact that they're not seeing the demand that they once had as agricultural prices come down a little bit as well, affecting the industrials. There's some warning signals on both ends.
Sure, but you got to navigate through that. And let's begin with inflation, first of all. I think that was a collective sigh of relief. What happened on Wednesday, in other words, we saw signs of a little bit of disinflation. But it's been our view that the Fed could remain cautious here, may not cut rates at all this year. But so far, economic growth and earnings growth, we think, will trump what's going on in terms of the Fed policy. Remember, liquidity is pretty generous. Look at corporate issuance, look at corporate spreads. We've reduced QT. We've got bond yields coming down. These are all kind of positive signals as well. You talked about the consumer in the sense of there is some slowdown, some evidence in some of the retail side. But think about services. In the first quarter, consumer spending on services rose over 4%. Yep. That's like the highest in 2 decades. So what are we doing? We're switching from goods, maybe, to services. I do think some of the lower-end consumers in the United States also experiencing maybe a bit of a pullback. Inflation does impact them. Maybe a bit of a K-style economy, but it looks to us like growth is still pretty solid in the States.
A K-style economy. And to be absolutely clear, you see a Fed that could stay on hold this year, but nonetheless, the stock story continues to be constructive because all of those factors you pointed to. What about the liquidity impulse then? The cash that's on the sidelines? And what is the next catalyst in the short term? Is it NVIDIA next week?
Well, I think NVIDIA is going to be important next week as we're going to get more information on that Blackwell, which is about 21 times the performance of the A100. So, and look, this week we continue to see lots of interesting news on Gen AI, right? Project Astra, have you tried ChatGPT 4.0, right? So some of the power of these applications is still to come, and I think that will encourage investors. On NVIDIA, TSMC's earnings were pretty good. I think that's a nice bellwether.
So that AI catalyst continues to run for the markets?
I think it does, because I think people are continuing to see the advancements. We haven't stood still in Gen AI. We have multimodal, text, video, programming, language translation, tutors. Let me find my glasses somewhere in the room. I think lots of things are happening there, so people can extrapolate about the productivity improvements ahead, and that helps, right?
Yeah. Sorry, you're saying AI is going to help me find my glasses?
This will help.
Because I lose them all the time.
I know.
Suddenly Guy Johnson's all in on this AI revolution.
You have to see Project Astra. Did you see it? I mean, he holds it up.
The video is very cool, isn't it?
It's very cool. Where are my glasses? Over there by your computer. Hello.
Will they help him find which pair to put on?
That's also a critical factor as well. But if you improve my eyesight, that would be the main thing.
That'll be excellent. That'll be really good. I mean, so you don't worry then, Nancy, when you say you're clearly excited about AI, and we watch that manifesting itself largely within the tech space, but then you wonder where it delivers for other industries, other sectors with a longer time horizon. Do you get at all concerned about, 2000 and what happened when we all got excited about every business but .com after their name? No. And then we all, the potential for the internet was not wrong, but share prices ran away with themselves. You don't get worried about that.
Yeah, I mean, 2000. Well, you had Pets.com, not exactly a durable business model, trading at like stratospheric PE multiple, no earnings, no cash flow. These companies are sitting on huge cash piles. They'll probably deliver about 25% earnings this year. But it's not just about tech. I want to be clear. One of our things that we've been talking about is this broadening in market participation. 10 of 11 sectors delivered very nice earnings in the first quarter. And actually, you can see not just the tech sector, but industrials, financials. How about utilities? You notice what's going on utilities? There's like a power thing going on because we need more power. These utilities are growing for the first time, the top line, and we think there is a super cycle happening in power.
And so how reliant is this outlook of yours, Nancy, on rates coming lower? You mentioned rates dropping, but you don't think the Fed's going to cut many times this year, and you think that doesn't damage stocks too much. But what kind of effect will we see on stocks if we don't get rate cuts and if rates stay high or even go higher?
Remember, what we're going to be focused on is earnings, and earnings are anticipated to accelerate as we move through the year and also broaden to more parts of the economy. That is what we're looking for. If we don't see that, then obviously that's some of the risks that you mentioned, but it's really about earnings. But remember, you go back to liquidity. Corporate credit's on fire. Spreads are the narrowest they've been in over 2 decades. The Fed just did QT, lessened the amount of tightening. Bond yields have come down.
Can they get any tighter? Can they get any tighter? Because they feel really tight right now, as you say. Isn't the risk actually the symmetrical risk on spreads that actually we see them widening out a little bit?
Well, I think, look, at the end of the day, there's been a huge amount of corporate issuance that continues to drive spreads lower. I think companies want to issue before the election, right? There's some
So you think they can go tighter?
I don't know if they'll get tighter, but what I would say is it's not exactly hard to access liquidity, is it, right? So even though the Fed hasn't cut interest rates, I would say liquidity conditions are pretty benign for corporates, and that's supportive of earnings as well. So earnings is what we're going to be watching, clearly, to see that acceleration in earnings as the year progresses. If that doesn't happen, then that's a different story. We'd become more cautious. But, we don't just own equities, and I want to make that clear, in the fixed income, or what I call non-fixed income space, there's lots of things. Gold is up 15% this year.
Yep.
Private credit is tracking to about 8 to 10%. Infrastructure, really interesting area,
And with
right?
infrastructure in mind, how does the politics play in? Do you position for change, Nancy, later on this year and into the next 4?
I think you can't guess what's going to happen in the election in the United States, other than perhaps to expect more tariffs. But let's face it, what Biden put so forward is 4% of the Chinese export. So it's not really a big deal in terms of its impact on inflation or the U.S. economy. So we can't really project what's going to happen in the election. But what I would say, it doesn't look to me like either president wants to cut back on fiscal spending, right? So that's not bad for growth.
Nancy, thank you very much. Thanks for joining us. Nancy Curtin, CIO of Alti Tiedemann Global. We thank you for her time. Coming up, we'll talk about commodities. Copper has been surging as demand is seen to only be growing. This all about the energy transition. We'll be back to that subject. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, created, when you're solving a problem that's real for you and therefore real for the consumer.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Good morning, Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
I'm confident that this time it's liftoff, and I think we're going to see more momentum behind it because you have three sources of demand this time around, meaning green CapEx, AI, plus military. Back in 2021, all we had was the green CapEx demand, and now it's in full force. Supply's not there, inventories are tight.
Jeff Curry there, Chief Strategy Officer of Energy Pathways on copper demand. For more on the copper story and the wider commodities landscape, let's bring in Marcus Garvey now, Head of Commodities Strategy at Macquarie Group. Marcus, thanks for joining us this Friday morning. Appreciate it. On copper then, so Jeff Curry coming out with a view that you could get to 15,000. That's his kind of target level in terms of pricing for copper. You called this cyclical upswing for commodities back in a note back in March. Where are we in that upside? Does 15,000 sound reasonable to you?
I think not in the short term, to be blunt, but maybe on a 2 to 3 year view, you can run scenarios where very high numbers become plausible. But I think one of the things that's really striking to us about the upswing that you're currently experiencing is that prices are actually beating our expectations from that note that we put out in March, and even looking a little bit back to February when we started to get more constructive on the sector. But in the near term, fundamentals are lagging. And you could argue that markets are pre-pricing tightness that's still to come. But there is evidently a risk at this stage that a lot is already in the price. And if fundamentals don't catch up quite quickly, you are vulnerable to a correction. So at this stage, I would really stress that actually it's the financial markets that are really driving the price action in the near term, and that physical is lagging what we're seeing. So that if you look at physical premiums, if you look at inventory developments, maybe with the exception of the US copper market, or if you look at, say, import arbitrages into China or Chinese apparent demand, biggest single center of demand for all of the major metals markets, none of them are actually particularly strong at this point. It's the financial market more than the physical market that's making the running here.
Okay, so I mean, Marcus, you're painting a picture of it. This is a kind of speculative play at this point by the financial markets. Talk to us about the demand supply dynamics then, and the fundamentals. What is most consequential in putting a kind of fundamental floor under the price? Is it China at this point?
I think you've got to separate a little bit out there between the very short term and the medium term point, in the sense that the argument that's being advanced, which we agree with, that copper has a very strong medium-term outlook. You can debate quite how strong, what that means for pricing, but I think almost everyone would agree it's very constructive. Comes back to a fundamental view. But that what we're looking at right now is a market which is, to some degree, pricing that fundamental development that's expected to come, but it's not here yet. And so that, to my point, it gives you an issue where the longer you don't see the fundamentals really start to deliver, you're vulnerable to a catch down if, for example, any negative surprises either on a fundamental or on a macro basis. Because if you look at most people's forecasts this year for the copper market are for a deficit, some very, very large deficits, even as high as sort of 700,000 tons. Our own deficit estimate is about 250,000 tons. But that year to date, copper inventory is up almost 400,000 tons. You should build seasonally in the first quarter of the year, but you should draw consistently in the second quarter of the year, and that's not happening yet. And so the ability of the physical market to get to where the financial market's expecting is starting to look a little bit challenged, that the financial market might be doing too much too soon. And there's a lot of speculative length in the market at this point.
Yes, and does that apply to New York in particular? We saw this phenomenon where the spread between the New York price and the London price seems to get stretched versus history, Marcus. It sounds from what you're saying that shouldn't be the case.
I think there's two aspects to that. One, exactly that shouldn't be the case on any sort of sustainable basis. There's no reason that over time you should see the premium in New York be anything outside of a normal sort of physical arbitrage level. We saw it briefly intraday go to about $1,000 earlier this week. The underlying cause of that is that a large portion of that financial length is sitting on the CME market in New York, both, I would argue, macro discretionary and sort of generalist capital, and also systematic momentum funds that have been investing in copper. But that in addition to that, and this is key for enabling that move to have happened, is that the US market is actually regionally tight right now, even in the context of a global market that's not that tight. You look at Europe, you look at Asia, ex-China, you look at China domestic, those markets aren't currently that physically tight. The US is. But the degree to which that's unsustainable is because you clearly opened up a physical arbitrage. It just takes a bit of time to close it. So that why I say that's unsustainable is because if you look at sort of August, September, you could easily find enough copper physically moving into the US to close that arbitrage. And I think you've already seen people starting to position for that in the physical market. Yes. Whether you actually even see that arbitrage still be open come that time is probably a function of what happens on the financial market side. If you see a bit of a positioning pullback in New York, then you reduce the degree to which that arbitrage is likely to be open. So it may unwind financially rather than physically.
So important to keep in mind the regional dynamics then as you describe them. What kind of a bullish signal, Marcus, do you think the BHP bid for Anglo was around copper? Because here you had a business that was that received a takeover offer and was prepared to strip out almost all the other parts of its business to allow the market to value it as a copper play. How bullish a signal should we read that as?
I think from a short-term market perspective, it doesn't really tell you that much about current market conditions quite clearly. But on a medium-term basis, what it evidently underlines is that in BHP's view, and of course they may be wrong on this, but they should be in a position to have a fairly reasoned opinion on it, the current market valuation of copper assets, in their view, is too low. And so if you're just thinking about that from a copper on a sort of build versus buy assets basis, if you think those assets are too cheap, implicitly, it's a very bullish signal for the copper price. I would add one caution, though. If we look at corporate M&A in this space over time, it doesn't have a particularly consistent track record in accurately forecasting the copper price. So whether or not they're right is possibly a broader debate.
Marcus, if I park the M&A story to one side, though, is there better value if I want to make the copper play in the metal or in the stock? Where am I going to get the biggest kind of return if I want to make this story work?
Well, I'm restricted in what I can say about equities, unfortunately, in terms of where I sit within the business at Macquarie. But I think as a general point, I would say what you've got to disentangle somewhat is the fact that the stocks can trade on a sort of future discounting basis, but that ultimately the physical market has to trade on a spot basis, and that can have future expectations baked into it, but that when you're in the current market conditions where a lot is baked into it and the spot market itself is not there, you do have a big vulnerability in a physical commodity market, as we've seen in numerous instances over time, where a lot of speculative length comes in, often with good reason, but you do too much too quickly. You do find that the physical market is then quite susceptible to a pullback in that commodity price itself.
So it depends on your investment horizons. Just a quick question on nickel. Nickel up this morning. Looks like we do have a problem in New Caledonia. The French are trying to gain control of that. Nickel, obviously, a battery metal, amongst other things. It's used in armaments. It's used in various other things. The nickel price has risen pretty sharply at the moment. Is that something that, again, is a short-term story that we're seeing, obviously, a near-term dislocation in the market having an impact? Or is that something more sustainable? And is that something that I should read into the wider battery metal story as well?
I think, for nickel, a big consideration really is that, irrespective of what happens in New Caledonia, what's going to really dominate the supply side of that market is what happens in Indonesia. And a key part of the recovery you've seen in the price of its lows year to date is the fact that in the first quarter of this year, in particular, Indonesian exports were quite weak. You had a lot of disruptions around mining permit issuance following the change of, or leading up to and following the change of president. If you now see, particularly as prices have bounced back to levels where previously we were well into the cost curve, we've moved out of that now, you're at a level where you're incentivizing to supply pick back up. And if you're not finding disruptions to that in terms of things like regulatory issues, actually, can the nickel market really get tight in the second half of this year? I think that's probably quite challenged unless you do find that Indonesian supply is persistently disrupted.
Marcus, I want to get your views on gold, up 20% or so in the last 12 months. How do you see the price action around gold evolving in the months ahead, and how much of this is a central bank buying story?
It's definitely been a central bank buying story for really the last sort of 2 to 3 years. But actually, if we look at the other major drivers, I think the two biggest drivers that have really pushed the gold price to where it is now is that we've seen Western investors, while they've still been somewhat sensitive to increased interest rates, they've actually been less sensitive to that than historic relationships would suggest. So they've really held on through this period of a rate hiking cycle and underpinned a lot of that gold price performance. And then the additional kicker that's really come in very strongly this year has been Chinese investors rather than Western investors adding a bid and pushing gold price up to these sort of all-time nominal highs above 2,400. I think in the short term it feels like reasonably neutral to us. You could make a sort of $100 case either way in the next couple of months or so. But when we look towards the election, I think in the autumn, that could actually be a really key point for gold's price performance this year. Because if we think about why Chinese investors have been so active, I think a few things which may be changing. We're seeing some policy announcements today on the housing market, but have been weak housing market, weak equity market has encouraged some investment into gold. Those things may move around in a positive direction in the next few months. But a big feature has been concern about RMB depreciation. And if, as we head into the election, the market is pricing a reasonable possibility that President Trump wins again, and that also he is still talking about putting 60% tariffs on all Chinese imports into the US, then there will be an implicit risk that you do get a period of RMB weakness after the election. And I would think that the way that is hedged by onshore investors with capital that's onshore is that you buy gold. So I think there's a very good chance that as you head into the autumn, you get a very strong Chinese investor bid coming back, as we experienced particularly in April, actually this year, and that could be a catalyst to push gold up another leg higher.
Okay, that's really, really interesting. Marcus Garvey, Head of Commodity Strategy at Macquarie Group, tying the elections in the US to the gold price and the consumer, at least the demand out of China. Really fascinating in terms of some of the key drivers there, but also cautionary in terms of the pricing we're seeing on copper, given the lack of fundamentals, arguably, to support the pricing, at least at current levels. Now, from earth metals, digging in the ground, to outer space, resources in space. Let's turn to the satellite story then. Elon Musk's Starlink is transforming communications across the globe. Bloomberg Originals has been looking at how the company's dominance is sparking government scrutiny and encouraging deep-pocketed rivals.
The largest single constellation of satellites orbiting our planet is run by a mercurial individual who needs no introduction. It's this guy. It achieves this by maintaining a vast relay network in low Earth orbit. That's the area higher than a jetliner, but below a GPS satellite.
Right now, Starlink has more than 5,600 satellites in orbit.
And it accomplished all this in less time than it took James Cameron to make a second Avatar movie.
At one point, SpaceX envisioned launching up to 42,000 satellites.
But this speed and relative success has raised eyebrows, concerned ones in government, and excited ones in the boardrooms of potential rivals.
It's essentially a company trying to disrupt a somewhat complacent marketplace.
That is just a glimpse of the full programme. You can catch the full Bloomberg Originals episode on Bloomberg.com and on YouTube. Plenty more Bloomberg Originals videos, reports on there, so you can enjoy those over the weekend. Coming up, plenty of sport over the weekend, I'm told. F1 world champion Max Verstappen speaks to Bloomberg about growing the sport, and the recent personnel changes at Red Bull Racing. We'll bring you our interview next. This is Bloomberg.
recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977, when by then I had a little research station.
My general advice is continue to seek out companies or people that are maybe one stage or two stage ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to like build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there, and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Portions of the M Live believe that maybe you can listen to Diamond but appreciate that he has a different time reference.
Yeah, and central bank officials as well seeming to try to kind of curb our enthusiasm to some extent in terms of FOMC officials overnight saying, look, we're still higher for longer even though inflation came in better than expected, and then ECB officials as well, yes, from the hawkish spectrum, suggesting that okay, we get a June cut, but don't hold on to your horses.
Still don't get the sense markets are listening though, do we? I mean, even if we've paused
Isn't
here,
this a market that's listening right now?
We've still seen gains, haven't we? And they're not selling off on the back of it.
So to that point, who said it this week? I can't remember who said this week that at some point the FOMC is going to have to take the view that it needs to kind of change market perception. Because the markets, basically, if you look at the financial conditions story, have just loosened financial conditions significantly.
But when has Jay Powell been worried about that, though?
So he hasn't, but at some point, does he have to be? Because the US, how do you slow the US economy down? If you do get a pickup in inflation, what is going to drive that narrative? And I think that's the concern. Is it going to be actually the K-shaped recovery, the fact that there's actually quite a lot of money still sloshing around the system, lots of liquidity?
There's been lots of fiscal spending, and there's also been lots of spending on experiences, such as concert tickets.
Don't look at me, look at him. Don't look at him.
I'm coming to you with this nice segue. Concert tickets and going to watch F1.
Okay. Nice try.
It says Guy on the prompt.
It does. I'm just saying that he's going to Taylor Swift, not me.
Oh, I see. Oh, I didn't know that.
But he's been buying the merchandise.
You didn't know you were going to...
No, I didn't know that.
I don't know if I know... Yeah, going to Taylor Swift. August.
Okay.
Yeah.
To deal with some of the other traumas.
I'm still debating who the +1 is going to be. The merch, though, is being bought by Guy Johnson. apparently, in terms of the Taylor Swift. He's got the hot pants, he's got the T-shirt, hot pants. Guy Johnson in Taylor Swift hot pants. There you go, Guy, over to you.
What? Why? Okay, we should now move on. Basically, Imola this weekend, one of the great sporting things that we're going to be watching. You've also got quite a lot of boxing. You've got some football to talk about. I'm just kind of getting Anna warmed up here to talk about all of these things in just a moment. It's obviously a huge moment for the sport as we continue to see Verstappen doing incredibly well. The sport has been doing well, not only on the racetrack, but also, obviously, in terms of its commercial success over the last few years. We've all seen, well, I've seen it, maybe not Anna, Drive to Survive has been a big feature, certainly in my house, and there's been multiple spin-offs of that as well. So that's had fans flocking to the sport. How do you continue that strategy? Well, the current world champion, Red Bull's Max Verstappen, spoke to Bloomberg's Jason Kelly about how F1 needs to consider different ways in terms of how it continues to grow from here and keep fans engaged.
It depends how you want to attract fans. Like, you can attract it, of course, in very different ways, right? You know, from the entertainment side or actually the performance side of things. And of course, you know, the sport has been growing a lot lately, probably from, you know, more the entertainment side. But, you know, you also need to question, like, what you actually want, because I think it's also very important to keep, you know, the real diehard fans, you know, really engaged. But, you know, these kind of things, at the end of the day, like, you know, I'm the racing driver. I'm very focused on my performance, and, you know, that's already taking a lot of my time, you know, trying to just be on top of my game, you know, being, you know, in touch with my team, what we can try and improve. And, you know, to be honest, those kind of things are not really going through my mind a lot, you know, how should I grow the sport? I mean, that's not up to me. I'm not, you know, also the shareholder of the sport, you know. I'm just here to try and win the races.
That's a fair point. And obviously the commercial success does, as you rightly point out, rely very much on success on the track. No one would question your success on the track. It's worth pointing out that obviously, you know, there's going to be a big change with Adrian Newey leaving. What's your confidence level, I should say, about that side of the equation moving forward, ensuring that you can stay competitive on the track?
Yeah, I mean, it's of course, you know, it's been you know, quite a change, I guess, but also a shame that, you know, Adrian will be leaving, because I think it would be always nice for him, you know, to be part of what we are doing. I mean, he's been incredibly important for us, especially from the start of Red Bull Racing, I would say. And yeah, I mean, at one point, you know, you have a lot of good people in the team, a really strong technical department that I trust in as well, you know, for the future. So naturally, the confidence is very high. I'm very excited for the coming years as well. But yeah, would it have been nice for Adrian to be around as well and see that? For sure. But at the end of the day, you know, when people want to maybe seek new challenges or whatever, you can't stop that.
Max Verstappen speaking to Bloomberg's Jason Kelly, talking about kind of how the sport develops from here. His focus very much on the racetrack. Imola this weekend, one of the key events. One of the key. It's not the. There's two in Italy. There's two races. So this isn't necessarily this isn't the Italian Grand Prix.
Got it.
But it's Imola. So it's a nice part of the world. What else we got? There's a big fight this weekend.
Yeah, hang on, before we get there, the Formula One thing. So he says he wants to attract, they want more viewers, obviously they do. Yeah. But like, it's just boring because he keeps winning.
There is
that
the
problem.
There is that.
He's part of the problem. He's too good. They've got too much dominance, Red Bull. I mean, that would be the argument from some. It's not my personal view.
Well, I mean, people argue that Netflix has made it more about the entertainment, you know, and maybe that was a feature of. Sure, he's winning at the moment, but that was an old criticism of Formula One, wasn't it? And then Netflix
the criticism of many sports is they don't embrace the entertainment side. That if you want sport to be successful, you don't want to be pitching it to the diehard fans. You want to be bringing in new fans. You want to be making it entertaining, and that's what the Drive to Survive story.
And they've managed to bring in a lot of female viewers as well.
Has done, yeah.
Apparently so.
Anna's not one of them.
not Anna. Still the holder.
No, I'm taking back Max Verstappen's line here. He said, when asked about growing the sport, he says, I don't know. I concentrate on racing.
That's not my job.
I don't talk about sport. I concentrate on other areas of news.
Yes, like cement. So
you missed it earlier on this week.
I have very serious interests.
In concrete.
Right, and whilst you're all watching the sport, I'll be, I don't know, playing the piano or something.
Boxing.
Enjoying myself.
There's boxing. Okay, yeah. excellent. The piano's going to be fantastic. I'm sure it's going to be very enjoyable.
We need a rendition.
But yeah, we do. Yeah.
No, that's not happening. That's not happening.
Boxing, we've got Arsenal fans. I think have probably got everything, fingers crossed, toes crossed, everything like that.
Absolutely. Sunday's a massive day.
Sunday's a really big day. Final weekend.
Both kicking off at the same time. 4 p.m. Sunday.
So which kind of
Man City and Arsenal?
What happens with West Ham? That's going to be interesting as well. The Everton. Anyway, it comes down to. Man City look like they're going to probably win it, but if I was an Arsenal fan, and I remember living in Highbury when they won it a couple of times, and Up Street was bedlam. It was fantastic. So that would be absolutely amazing. The golf, Schauffele, 62. This is the exact opposite of the Masters. The Masters was so windy that everybody was really struggling. There was no wind yesterday. Some massive scores coming down as a result of that. Loads of
Under
birdies.
-9.
Yeah, this
whatever
is
that
huge.
means. That's a good score. I know that's a good score.
You know what that means.
$20 million prize money.
Yeah.
That's the total purse. Valhalla.
$20
million.
It's second major, so we'll watch that this weekend as well. So Anna's going to play the piano. There's sport to be played.
Tom, I'm very glad you're here, because the director sat on a wide shot throughout that entire conversation, just to emphasise how little I had to say on the subject. But excellent. I'm glad have we done justice to the...
We have. What else is coming up for the rest of the day, Anna?
Okay, plenty more coming up. In fact, in the next hour, let's just deal with that, including an exclusive interview with Pascal Dono, the president of the Eurogroup. Joint debt issuance could be part of that conversation. Also joining Francine Lacroix on the pulse, the president of Georgia, in fact, to take a much more serious turn when it comes to the country's ruling party facing protests over its foreign agent law. That has been making a lot of headlines globally. So we'll certainly bring you that important conversation. That is it for markets today. Markets themselves actually down 0.25% as we bring the trading week almost to a close. Still early here in Europe, heading towards the US Open, flat to negative. This is Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
DOJ or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. traders and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Well, risk sentiment dampened after Fed officials warned that interest rates should stay higher for longer, causing another record-breaking stock rally. Now, Chinese retail sales show their slowest rate of growth in a year, while Beijing gives its ailing property sector a boost, easing mortgage lending. Plus, Jamie Dimon tells us he's still more worried about inflation than markets appear to be. We'll have more from our interview with the JP Morgan chief executive. Now, also coming up, some big interviews on politics and, of course, on the economy. We'll be speaking to the president of Georgia ahead of the Eurogroup. And, of course, we'll also talk to leading wealth manager Daniel Pinto. Now, let's take a look. First thing is first. Let's look at the European markets map. Again, we've had a bit of volatility, actually, in the week so far. Now, they did retreat a lot of these stocks for a second day. Again, there's been some dialed-down bets from Federal Reserve policy easing, and that seems to be weighing in on sentiment. A couple of other things we need to watch out for. Richemont actually has a new chief executive officer, up more than 6%. And then if you look at some of the biggest banks, again, they're a little bit higher after gaining already 21% this year. Now, to talk about the markets, to talk about the Fed, to talk about inflation and everything in between, let's bring in Patrick Armstrong. He's Chief Investment Officer at Plurimi. Well, Patrick, so good to speak to you. We've had a good week, right, by certain metrics, but at the same time, at CPI prints means that the markets are now, expecting the Fed to kind of, not panic. Is that right?
Inflation's too high, growth is too strong, the employment backdrop is too strong for the Fed to even be considering cuts in the next few months. So as the summer plays out, the employment backdrop may weaken. There's cracks starting to emerge a little bit, but it's still a very robust employment market. Wage growth outstripping inflation. Anyone who wants to work has a job. There's 1.4 job openings for every unemployed person. So it wouldn't make sense to be cutting, and just markets show you there's a lot of liquidity slushing around in markets. You can just see movements, meme stocks, things like that. So it's not surprising the Fed's not talking about cutting. Inflation, I think, is going to be sticky, persistent, and it's what's going to make the debt dynamics work is nominal economic growth. Real economic growth will be there, but nominal growth is what makes debt to GDP ratios start to work. So you need inflation to be part of the solution even.
Yeah, and Patrick, we also spoke to Jamie Dimon, and this is what he had to say about inflation and possible market correction.
Surprise would be higher rates because inflation didn't go down. That inflation's been stubborn, maybe bounces up next year. I think inflation next year may be in the cards. It may have nothing to do with what you're seeing today. So that to me is the surprise.
Are you expecting a correction in certain parts of the markets, Patrick?
You should always expect a correction. You don't know when they're going to come, so you have to be ready for it. I don't think multiples are so frothy that equities can't move higher. I expect equities to move higher by year end. I think the leaders of the market continue to move forward. So people worry about valuations of the magnificent seven. 6 of the 7 for me look very attractive. Tesla, I can't get my head around the valuations there, but the dominant market positions, the free cash flow, the profit margins, defendability of those margins, they demand premium multiples. And I think the multiples they're trading at are fair, and they are growing, so I expect strength in those to continue. We own Novo Nordisk. The obesity is the new pandemic of the world. So the stocks that people worry about because they've run so far, so fast, still look attractive to me. So there could be correction anytime something's run up so far, but I'm not worried about the multiples they trade at.
But Patrick, when you see, is this a really good setup, I guess, for risk assets? And again, if you look at risk assets, they're not all created equal. So what do you look at right now?
I like risk assets. I came into this year thinking the Fed funds were restrictive, and I don't think it is restrictive anymore. Just the way the economy is holding up, that there's been no real negative feedback from where interest rates are, and it just made sense that Fed hikes so quickly, there would be repercussions from it, and there hasn't been. So I actually think the Fed's at fairly neutral position right now, and growth is continuing with the Fed funds rate where it is. So as long as there's growth, as long as there's a fully employed American consumer, that drives the economy, and the economy is performing better than I expected coming into this year. We're in a no-landing scenario, in my opinion, and that is a good backdrop. You've got Powell, who can't cut, he says, but he wants to cut, and that means there's a put.
Want him to cut.
Markets want him to cut, but it just wouldn't make sense for him to cut. But everything he says is, I can't cut, but if I need to cut, I'm there. And that's the put option you want to take risk assets. So the Powell put's there. If something does go wrong and that correction happens, or something in the economy forces that correction, I think the Fed's ready.
We had, of course, a story about Richemont today with the change of chief executives. Luxury stocks were kind of the darlings, and now they've fallen by quite a lot.
Yeah, we own Hermes, and we've had that for a number of years. We used to own LVMH a year and a half ago. We sold that just as multiples hit 30. But all aspects of the consumer are strong. So a year and a half ago, I was hiding in luxury because the mainstream market had some weakness there potentially. Luxury stocks, there's a real divergence in companies. It's not a tailwind that all luxury is flying right now. Great companies that have the products that people want are doing really well, and companies that are a little bit out of fashion right now are missing. So it's not a tailwind for the whole sector.
Do you expect more consolidation in Europe? And again, valuations have been certainly not at the standards that we've seen in the US. I don't know whether that also leads to consolidation, for example, in banks like Sabadell.
Yeah, so we actually just sold BBVA. It's a stock I've held for a while. I think that they're paying up a little bit too much. I think we've been talking about consolidation in European banks for years and years, and
decades.
It will happen. But yeah, it's not good to be buying somebody who's chasing an acquisition. If there's a merger of equals that just makes sense, you're going to get better pricing power, economies of scale, because it is an overbanked region, Europe. Consolidation will happen. I'm just not a fan of a company chasing an acquisition.
Anything attractive in bonds at the moment? Again,
tips are attractive, yeah. It's compelling. As Jamie Dimon is talking about inflation, I think inflation's with us for a generation. It's just populism is printing new money to pay off old debt, and that's going to create sticky inflation. So a real yield on a tip of 2%, you lock in whatever inflation is and get an extra 2% a year. So I like long duration tips. I still like short duration corporates because the Fed cuts may not happen, and you're getting a pretty attractive yield at the front end of the curve.
What do you do with the ECB? It would be a shock if they didn't hike in June, right?
Hike? No, yes.
Yeah, cut.
That would be a shock.
I haven't said that for that'd be. I mean, if they don't cut in June,
yeah, they've told us they're cutting. They have to cut now. They'd lose credibility because they've just guided everyone that this cut is happening. And the cut makes sense. The economic backdrop's not as strong in Europe. They want a relative loosening versus the U.S. because the U.S. economy is outperforming. So, yeah, the cut's happening from the ECB.
What happens after the cut? So I misspoke because actually the danger is that they cut and then they have to hike.
Yeah, another,
If inflation's too fast.
It's possibility. I think they've thought it through. The ECB actually does have a restrictive rate, in my opinion, despite being lower than the Fed. Just the European economy's got different dynamics, and that cut gets it down more to neutral. I don't think, unless we have a real global upsurge in growth, that they'll have to do an about turn on that.
So what happens for attractiveness of European economy? We're also having the EU elections, and I don't know whether we're underestimating some of the policies that could actually come out of that. Yeah,
there's elections everywhere this year. I think it's 65% of the population's got an election in 2024. So politics is always a lot of headline-grabbing things, and then it's a bit of it doesn't matter as much as you worry most of the time, and I hope that's the case. I'm not really putting much of a wild card from European politics. I think it's steady as you go, and not everything is great in European politics, but it's. I don't think we're going to get any shocks from that.
Okay, Patrick, as always, thank you so much for joining us. Patrick Armstrong, their Chief Investment Officer at Plurimi Wealth. Now, nickel rallying the most in a month as unrest in New Caledonia raises concerns about further disruption to supplies from the French territory. Now, the South Pacific Archipelago, which was the world's third biggest producer of the EV battery metal last year, has been racked by violent riots this week due to a change in voting rules. Now, that's disrupted output from French miner Eramet, which is running its local unit at minimum capacity. So we'll have plenty more on that story as well. This is Bloomberg.
Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Now, Georgia's prospects of joining the EU are in jeopardy after the ruling party passed a foreign agent bill. Now, under the law, foreign-funded NGOs and independent media would have to register with the government. Now, the ruling party says the bill is necessary for transparency, but the legislation has triggered massive protests and drawn condemnation from the US, from the EU, and from NATO. Well, we're delighted to be joined by Salome Zoubarashvili, the president of Georgia, who has said she will veto the law. Madam President, thank you so much for joining us. Do you think that this law could still be stopped or reversed?
It has been stopped and rejected last year by the same mass demonstrations and protests from our European and foreign American partners. But it has been reintroduced despite the promise by the government that they will never do so. And the way they have introduced it and debated it in the parliament without allowing the opposition really to be present even does not make me hope that they are going to withdraw it. And frankly, by now, it doesn't matter very much whether they withdraw this law or not, because it's the whole picture that is very concerning. All other laws that have been running against the recommendations made by European Union in order for us to be able to apply for opening negotiation of accession. So it's a whole range of, on one side, laws that go against, the absence of laws that are required in the fields where we are supposed to make progress. There is nothing to be done. And the third part is the rhetoric, which is very anti-Western, anti-European, from the top to the bottom of the ruling party, from the honorary president, Ivanishvili, to all the leaders. They speak the same language and call our partners of 30 years that have really built our state and its independence and its development. They're called foreign agents that want to subvert the country, that want to destabilize, that want to overthrow the government. This is a very Russian language. That's Russia. Well, that's what Russia is always saying, and
Madam President,
what it is promising.
So how much concern has there been in your discussions with the US and with the EU, and what does this mean to possibly exceed EU membership?
Well, it means that we are at a very concerning point, that the measures taken and the turn taken by the authorities is not leading us in that direction. And that's why you see these massive demonstrations, up to 200,000 people, and it's a 38th day of demonstrations. And that explains, it's this major concern that we might be losing a very important chance, and that chance might not come back in the future. And that would be the responsibility of the government. So there is concern in the society, there is concern among our partners, but we still have a chance because we have close by elections next October. And I think that after this very clear demonstration, expression of the will of the people on the streets, now we need to have a very clear expression of the will of the people in the elections to confirm that the road they want is a road to Europe and nothing else. So it will be a kind of referendum.
Are you in the more immediate time actually concerned about the increase in violence and the crackdown on protesters?
I am concerned when you have in a row 38 days of demonstrations, while we are very pacific protesters. I have to underline that because they are basically young people, but not only. And there has not been one single car burnt or one shop vandalized during all these demonstrations. So that shows the type of demonstrations we have where people sing and dance. But of course, the violence that is exerted by the police forces and especially by special forces can always escalate. That's why I think that we have to be very careful, that our partners have to put pressure on the authorities to stop the intimidation that we have. People are arrested, including in their homes, because they have been seen and photographed on the demonstrations. So that should be the pressure that we need today from our partners, Europeans and Western partners. And then we will need support to prepare for the elections.
Madam President, you've called this this law a Russian law. Does this go to the fact that basically it's a battle in Georgia over who to align with, Russia or the West?
There is no battle in Georgia. Georgia, you have to remember, is a country that has been fighting for its independence from many countries over the centuries, but from Russia still since 1801. So it's very clear for us who is the country that wants to occupy Georgia, and who are our friends and partners that have been supporting Georgia's independence and development. And Georgia's independence is directly today for 80% of the population, and that explains the high numbers linked to Georgia's independence. We know that those two cannot be delinked. That's why such a reaction, and that's why such a strong support to our European future.
But why do you think the founder of the ruling party actually wants this law?
That you have to ask to them. It doesn't make sense. They might even have won the elections if they had not presented this law. And because their speech until now, their narrative, until even last December, despite some measures that were not very comprehensible, their narrative in December was that we are going toward the European Union. We are the ones that made that possible. And suddenly we have the narrative that you can hear in the speech of the president of the party, Ivanishvili, on 29th of April, which is a war on our Western and European partners.
Madam President, thank you so much for joining us today. That was Salome Surabash. Really, thank you, the president of Georgia there. Now, a reminder of the Georgian ruling party's response. It says the law is needed to expose the funding of non-governmental organizations and media. Now, a couple of news that we need to bring you up to date with. This is the Chinese central bank, PBOC, set up a 300 billion won of relending scheme for public housing. So this is a number of things that policymakers in China are trying to put in place, actually to support some of the sectors most in need. Earlier, China announced its most drastic move yet to shore up the country's struggling property market, removing the floor on mortgage rates and encouraging local governments to buy properties to convert them into affordable housing. Coming up, Jamie Dimon tells us the U.S. must stay engaged with China. More from our interview with the J.P. Morgan chief executive. That's next, and this is Bloomberg.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
My general advice is continue to seek out companies or people that are maybe one stage or two stages ahead of you. And I think this is generalizable to not just to startups, but anyone seeking fast growth in their own professional lives, in their careers too. What does greatness look like? Try to seek out people who've been there, done that before, and then try to not connect with one, but try to interview 3, 5, 10 people to see what is a general pattern of greatness that look like that will get you to the next level of the company, next stage, maybe a year, 12 months from now, 24 months from now. Seek out people who kind of went down that path a few times. Then you'll start to find this pattern that start to emerge. What are things that you need to have 12 months from now, 24 months from now that you currently don't have? Then try to build a path towards that. It's almost like Amazon's or Jeff Bezos' mantra of working backwards. Think about what your end game or next stage look like, and then figure out your steps to getting there and who do you need to work with, upgrading or coaching your existing team or recruiting from somewhere else to really level your leadership. Because ultimately, the job of a CEO is to do 3 things, right? One is get the strategy right for your company, making sure it's executed, get the right teams onboarded, getting the resources, whether it be fundraising or allocating your resources. So it's strategy, people, or team, figuring out how you need to navigate those things to get to the next level.
America, we should define that fairly and properly. If there's unfair trade, negotiate that or do whatever you need to do. But the engagement is the right thing to do. China is not a natural enemy of the United States. They have a lot of their own problems. So, to me, we can work together as best we can. And then we have common interests: climate, anti-nuclear proliferation, anti-terrorism.
But what does it mean for a bank working in China, actually, given all of this volatility?
They're cautious. I mean, China, if you look at China from a risk-reward basis, it used to be very good. It's not so good anymore because all these things can go wrong. And remember, we bank, I've got the number, but 1,500 multinationals in China. They're not leaving China, so we're going to serve our clients there. We're just much more cognizant that the risk is higher. And I put Hong Kong in that bucket too. We kind of look at China, Hong Kong as one at this point from a risk standpoint.
What does the Trump administration mean for the U.S. economy?
I don't know.
Why? Because it's unpredictable, or because we're too soon to actually trying to figure out the policies that he would put in place?
So if you look at history, who was elected president may not necessarily affect the next year. That's kind of like we're a big tanker and that's going to happen. I think the much more important thing is what we do in the geopolitical situation. I've always been quite clear that American leadership is provided to keep the world free and safe for democracy. And that means economic alliances, which includes trade, by the way. I think we should spend more time in trade. It means NATO. It means that Russia should not win in Ukraine. Because if they do, I think it can tear asunder this Western world.
I know you've ruled out being Treasury Secretary. Yeah. Why? What would it take to get you into politics?
I don't think I'm suited for politics. I love my job, and so I'm not sure I want to do something like that. And I can hopefully.
But even if you got the call, would it be hard to say no?
I don't know. Probably yes. I love my job, and I have no interest in leaving or doing anything else. So.
Well, that was the JP Morgan Chief Executive, Jamie Dimon, speaking to us at the Lenders Global Market Summit in Paris. Now, Richemont has named Nicolas Boss as its new chief executive. He'll start in the role next month. The management reshuffle will actually see the chairman and controlling shareholder, Johan Rupert, give up some of his management duties. Now, the changes come as the luxury conglomerate reported annual profit and sales that actually met expectations. Now, on the back of that, you can see Richemont gaining 4.7%. Coming up, as the ECB debates how quickly to lower rates, we speak exclusively to Eurogroup President Pascal Donahue. That's next, and this is Bloomberg.
Names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices, they all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Sentiment, of course, dampened after Fed officials warn interest rates should stay higher for longer, causing another record-breaking stock rally. Now, Chinese retail sales show their slowest rate of growth in a year, while Beijing gives its ailing property sector a boost to easing mortgage lending. Plus, JP Morgan Chief Executive Jamie Dimon tells us he's still more worried about inflation than markets appear to be. Well, good morning, everyone. Welcome to The Pulse. Happy Friday. We've made it to Friday. I'm Francine Lacqua here in London. Now, the European Central Bank's Isabel Schnabel has come out against back-to-back interest rate cuts in June and July, saying that the second rate cut does not seem warranted on current data. Now, as they debate how quickly to lower rates, officials are zeroing in on wage growth, which has remained rapid, as well as geopolitical threats like the conflict in the Middle East. Now, to discuss all of this, I'm delighted to be joined for an exclusive interview by the Eurogroup President and Irish Minister for Public Expenditure, Pascal Donahue. Minister, thank you so much, as always.
Good morning, Francine.
For joining us. I mean, you understand the nuances of inflation. frankly, more than most. How difficult, given the underlying pressures of fragmentations, of kind of shifting AI, is it to reach the 2% target?
It is complex, but I do believe there's a path available for that to happen. If you look at where we are at the moment, last year we would have seen inflation in the euro area at just above 3%. I believe across this year we'll see it at around 2.5%. And if I look at next year on current economic forecasts from, let's say, the European Commission, I believe it will be close to 2%. So I do believe there's a path towards achieving that. Fiscal policy within the euro area is not contributing to where we are with inflationary challenges at the moment. And I think the approach the ECB have at the moment is frankly the right one. It's a complex changing world. Let's look at the data every month, every quarter, and see where we are then.
Of course, I know the ECB is independent. I know you're not also a markets guy. But actually, when you look at once there's a cut, does it make a difference if we continue cutting to how people think about Europe, how people think and connect actually with politicians?
I think it will make a difference. But as against that, what also makes a very significant difference, which was a real risk in recent years, that we saw the risk of inflation becoming embedded into our economies and our politics, with all of the impact on the cost of living for households, for businesses, and in turn how they view politics. That could have been a huge challenge. I believe we've been successful in navigating that challenge. And as we get to a point that inflation is at a low and a stable rate, the ECB will then make their decisions.
Why is it so difficult in Europe to have a capital markets union? I know it's difficult to break down some of the barriers. We understand that there are some members that say, look, we'll go at it alone if we don't have a wider resolution.
Sure. So we are making progress in capital markets. Capital markets are part of the single market. They have evolved. But I think the premise of your question is a fair one. We haven't made the kind of progress on capital markets that we have in other aspects of the single market. Why? The reason for that is these are areas of important national sensitivity. It's important to economies at a national level. But all that being said, I believe there is a renewed high-level political focus on doing this. It's been led by the Eurogroup, and the reason for this, as you will well know and your viewers will know, is we are trying to normalise borrowing, normalise budget policy, and at the same time we need to fund huge changes. And we've hundreds of billions of savings within the euro area and European Union that could be used to really help with this. And this is why on Monday night, for example, finance ministers of the European Union get engaged on specific areas that we can make progress on.
What do you worry about Europe at this juncture? Do we need more integration? We also heard our editor-in-chief actually spoke to President Macron Monday, and he wasn't against cross-border consolidation. But if Europe doesn't integrate more, is there a chance of it dissolving?
So I think we have proven again and again that any risk of dissolution is completely overstated, and the European Union have demonstrated its political resilience and its solidarity in recent decades so strongly. So I believe the European Union is really here to stay. But to deal with your question then regarding what is a risk that I would be concerned about, it is really the risk of our medium-term economic performance. We're getting inflation down, growth is back, we've avoided a recession, which is a huge economic achievement. But I want to see, as we get inflation down, I want to see the euro area and Europe grow quicker. I believe we can do it, but we need to take further steps to make that happen. And that's why your earlier question regarding capital markets is so important.
We have big elections, of course, the European, we have big elections everywhere. But actually, local elections in certain parts of Ireland, there are, of course, the European elections. I mean, what are people voting on? Do you worry that it's again, a bit of a mismatch, and so actually the polls are not right, that we could see surprises?
So I think we're in a, just as you said, there's big elections happening everywhere at the moment. I think there is a trend in recent elections, which is the degree of volatility that can happen during campaigns and then at the end of that in the election result. From an Irish perspective, the issues that voters think about, I think, are in common with what's happening across Europe. Housing, cost of living, pressure on public services, how we can look after ourselves in a world that's really changing, are the kind of issues that people bring up with me on the doorstep in Dublin Central, and I know across Europe, they're the issues that my finance minister colleagues are grappling with too.
I mean, how would you look at immigration? This is one of, I guess, the most contentious or divisive issues across European and maybe world politics.
And of course, it has been a significant factor in recent political debate. and that is explained by the change that has happened in migration. We've the largest movement of people across Europe since World War II. We, as always, need to realise that those who are coming to countries such as Ireland, who are seeking refuge, are coming from dire humanitarian consequences and conditions in so many cases, and we have to look after them in a way that is compassionate and fair, which is what in Ireland we are trying and working to do.
I think there's a recent opinion poll suggesting that Fine Gael are at very close levels to Sinn Féin. Do you ever foresee a possible coalition?
Absolutely not. I do not believe that will happen. The poll that you refer to is one that shows Fine Gael growing in support due to the new leadership of our Taoiseach, Simon Harris. But it shows a massive slide in Sinn Féin support now that's taken place over the last year. I believe that will continue, and I believe coming into the general election in Ireland, which will happen sometime next year, I believe it will happen at the end of our parliamentary term next year. I believe that this government will be able to put forward a great case for 3 independent political parties who will be making the case for the government to be re-elected.
How much anxiousness is there in Europe if Donald Trump gets into the White House on a defense level, but also economically with tariffs?
Sure, it's going to have very significant consequences. Who the American people want to be their president is obviously a matter only for America and for them to decide. But my big lesson over the last number of years is the need for Europe to deepen its economic ability to stand on its own 2 feet. That is why we've taken the actions that we have regarding supporting the people of Ukraine against the terrible invasion that they are grappling with. And it's also why, for example, the decisions on capital markets and how we structure them are really important. The friendship, the relationship that we have with the United States and Europe, I believe, is extremely important and valuable. However, we also need to look at how we can ensure that Europe economically is stronger within a global economy.
So do you believe trade deals will depend on political alignment more than they ever have?
I think political alignment has always been a very big feature of trade deals and trade policy. And I think the big lesson at the moment from some of the debates that we're seeing taking place on economic policy is it reminds me how much politics matters. Being at the IMF World Bank meetings there a few weeks ago, I was struck by how many of the analysis said that decisions that politicians make can really matter in economics. And I think we can see why that is at the moment, and when it comes to the conduct of trade policy in the future, how we can ensure that they are fair, and how we can ensure, particularly here in Europe, that trade policy is rules-based, is multilateral, but is also fair to the European Union, I think is the big terrain of trade policy debates in the years ahead.
Thank you so much for joining us.
Thank you, Francine. Thank you very much.
In London, that was the Eurogroup president, of course, and Irish Minister for Public Expenditure, Pascal Donoghue. Now, coming up, we talked to Daniel Pinto, the chairman and chief executive of Stanhope Capital. He joins us to discuss Fed, inflation, and the widening gap between Europe and the U.S. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Now, markets now just pricing in 2 rate cuts from the Fed this year. Several officials at the central bank, including Loretta Mester, John Williams, and Thomas Markin, have all said it may take longer for inflation to actually reach their 2% target. Now, the resilience of the U.S. economy has surprised some, and it comes as the economic and financial gap with Europe continues to widen. Now, GDP growth and productivity levels are now much further ahead of the U.S., something which my next guest says is a once-in-a-generation phenomenon. Well, Daniel Pinto is chairman and chief executive of Stanhope Capital, an asset management firm he started in 2004 with more than $41 billion of assets under management. So, Daniel, as always, thank you so much for joining us, and welcome back to The Pulse. When you look at what you're expecting from the Fed, I mean, it's a little bit of an outlier call. You're expecting the Fed to cut quicker than the market is pricing. Would they cut because there's a slowdown or because of inflation is under control?
My first comment, Francine, is that who would have said that watching central bankers would have become as exciting as watching a thriller? We listen to each and every word. Look, my sense is that the U.S. economy is slowing down. It's still doing okay, but it is slowing down. Let's remember that the market was expecting 2.5% GDP growth for Q1. It came out at 1.6%, so it is slowing down. You have PMIs coming down, which is a sure sign that there is a slowdown. You have unemployment picking up a bit, still very low, but picking up a bit. And 2 more things, which in my view are very important. The first one is that saving rates in America have collapsed. Post-COVID, Americans had plenty of savings, and that sustained the economy for the last 2 years. Right now, they have 3.5% of savings, which is the lowest point in the last 10 or 15 years. Which basically means that you no longer have this buffer in the form of the domestic consumer to support economic growth in the next few months. And I think the Fed knows that, and the Fed will cut rate, in my opinion, in September, probably twice.
So, Daniel, we all spoke to Jamie Dimon yesterday, and he was saying, look, it's the market makes it a given that we have a slowdown, that is a soft landing, and that's not a given. But is there the worst case scenario is that inflation actually stays up, and that these indicators come down? So what does the Fed choose then, and what kind of economy are we left with?
I think the Fed will be under pressure for another reason, which is that let's remember that a year ago we had a banking crisis in the U.S. Yeah. We are not hearing anything about it anymore, but you have dozens of small regional banks in America that are exposed to real estate, are writing off loans, the higher for longer phenomenon is having a direct impact on this second tier of the banking sector in America. And I think that the Fed will, in addition to the slowdown that I described, the Fed will very much be aware that if they keep rates at this high level, they may have another banking crisis on their hands. Which obviously they would like to avoid.
But there's also a question of why the Fed is not pushing back against some of the market exuberance that we've seen. Do you see this as being problematic?
I don't think it is problematic. I mean, there is some exuberance in the market, but I don't think that we are in bubble territory. If you look at stocks in America, they are trading on multiples of about 20 times, which is higher than the average. But if you strip out the technology sector and the Magnificent Seven, the valuation levels in the U.S. are in line with the average of the last 25 years. You don't have a bubble in the equity market in the U.S. I don't believe so.
Daniel, I know there are some charts actually that you look at, which we love showing because it gives us a glimpse into kind of what kind of template you look at to look at growth and valuations. There's a mismatch between the U.S. and Europe. I mean, if you're expecting actually the U.S. to slow down not significantly, but enough to pull forward expectations of a cut, where do you see the biggest play? Do you get into European stocks?
So European stocks are cheap at the moment as compared to the US. In fact, you are at the point where the discount between Europe and the US is at its highest in the last probably 20 years. You basically have a 35% discount between the valuation of European stocks and the valuation of US stocks. It makes a certain segments of the European equity markets attractive. And it could be, and we've seen that in the last few months, that for a short period of time, European equities could outperform the US. But for any long-term investor, I would recommend having the majority of their exposure to US stocks for reasons that have to do both with the US economy that has decoupled from the European economy, and as a result as well of market dynamics, which are much better in the US than in Europe. So short term, yes, European equity is attractive. Long term, I think investors should keep the vast majority of their equity exposure into the US.
I mean, this is actually the chart of the day that we're just showing, one of the charts that you're looking at. I mean, does this explain why certain companies, I mean, we were talking with actually the chief executive of TotalEnergies just on Tuesday, but other companies would look at a listing in the US, and does that even make sense for big European companies?
They would, and it should worry a lot of politicians in Europe. When you hear TotalEnergies, which is kind of a national champion for France, saying we would like to move to list in the US, it is a shock. When you hear Shell saying the same thing, it is a shock. And the reason why they are saying that is very simple. The capital markets in the US are so much deeper that they get better valuations. You cannot blame them for saying, I'm working for my shareholders, and with shareholders in mind, our interest is to list in the US. And the reason why the capital markets are so much deeper is that they have a pension system that drives savings into the real economy, whereas in Europe, in most countries, we have a pension system that is still public, and is not driving savings into the productive economy. And that's a major issue. Just take the case of the UK. 25 years ago, pension funds in the UK were investing 45% of their portfolios into UK equities. Now it is 4%, 5%. And that has a massive impact on appetite for equities overall, and therefore valuations. And that is something that CEOs across the UK and across Europe have in mind.
Daniel, I have so much more to ask you, because that goes back to some of the mansion house reforms that we were talking last time you were on. But I think historically it's also quite difficult to have a headquarter in Europe and list in the US successfully. So Daniel Pinto stays with us, and we'll have plenty more on this next. This is Bloomberg.
This is Bloomberg.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Well, still with us, Daniel Pinto, Chairman and Chief Executive of Stanhope Capital. Daniel, thanks so much for sticking around. Now, we were talking a little bit before about the change or the difference in capital markets between the U.S. and Europe, especially in the UK. I mean, what should be the priorities of politicians and policymakers in Europe to be more competitive and keep the good companies here?
So most of the savings in Europe are in the hands of insurance companies and pension funds. And right now, this capital is locked up, unable to deploy itself in private equity, public equities, etc. And that's a major difference with what's going on in the US. And I think it is hampering not just valuations, but the capacity of these companies to invest. And that's really not just an economic issue, it's a political issue as well. So I think the priority for politicians right now should be to address this very issue. Make sure that insurance companies have more leeway to invest in private equity and public equity. Make sure that pension funds are not just focused on investing in bonds, which are not necessarily helping the economy at large, but investing more in small and mid-cap companies and in large companies. That should be the priority.
Yeah, it's not easy because it goes really to the heart of like risk-taking. But talk to me a little bit about what you're seeing in the pipeline. Are there more IPOs or is there more M&A deal? Is it waking up?
So clearly, after 18 months, 2 years of pretty much a standstill in the IPO market.
Sleeping Beauty.
Absolutely. And private equity funds not doing much, frankly. What you see now is private equity funds being very keen to deploy more and sellers more open to selling. So you'll see deal flow picking up, which is great news. The IPO market is slowly opening up, more in the US than in Europe. I was pleased to see that the Chinese company Shine is contemplating doing an IPO in London as opposed to the US. It's a good sign, but sadly, I think we have to do not a done deal, and we need to do much, much more to make London more attractive. But clearly, the trend is going in the right direction in terms of IPOs and deals.
I mean, does it make a difference who comes into power in terms of businesses right now, or do you see both parties?
In the UK?
In the UK, pretty much in the middle.
I think the two sides want to reform London and the city in general. The question is whether they've been talking about it for a while. Not much has happened. The question is whether any new government, probably from Labour, would actually implement the reforms that are absolutely necessary. I hope they will. They seem to be more market-friendly than people expected. Let's see.
What do you do with gold right now? So it's a play against everything, but it's also, I guess, there's movements maybe from other countries to sell treasuries and buy gold.
So there is something structural happening in the gold market, but beyond the gold market, in trade in general and currencies in general. You've seen the price of gold going up dramatically over the last, I would say, 12 months as a result of central banks buying more and more gold. And the biggest buyers of gold have been probably the Chinese. And the reason why they are buying more gold is that they don't want to be in the position of the Russian central bank, which, given what was going on in Ukraine, ended up being sanctioned and ended up having their reserves frozen by the US. The Chinese have trillions of reserves. The last thing they want is to, hear one morning that the Federal Reserve had decided to block this money. So they buy more and more gold. The Indian central bank is doing the same, and that is what's sustaining the gold market. Beyond that, I think we should read behind, the rise of gold, an increasing risk of currency wars and an increasing risk of trade wars.
Is that your biggest concern?
Tariffs. That would be my biggest concern for the next 12, 18 months. You heard President Biden announcing last week very high tariffs on electric vehicles, 100% tariffs, tariffs on microchips made in China. And then you heard Trump basically saying, oh, 100% is not enough, it should be 200%. So that rhetoric is giving you the direction of travel. Direction of travel is more and more trade tension. And trade tension and tariffs are a very, very bad thing for everyone. So we should be very careful about that.
And possibly inflationary. Danielle, thank you so much, as always, for joining us. Danielle Pinto there, the Chairman and Chief Executive of Stanhope Capital. Now, Bloomberg Brief is up next. Also, a reminder, China this morning unveiled some pretty broad rescue packages to try and shore up their housing market. This is Bloomberg.
Operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Good morning from our global headquarters in New York. I'm Manus Cranny. Welcome to Bloomberg Brief. Let's set your agenda. The bull run hits a pause as more Fed officials call for patience on rate cuts. China gives its ailing property sector a boost as new data points to a lopsided economic recovery and 2 AI deals. Reddit rises on a partnership with OpenAI. Snowflakes is in talks to buy the startup Reka AI for $1 billion. We do like a $1 billion deal on a Friday morning. It's not going to exactly rock the tech sector completely. You've had 4 weeks of gains. If we can put green on this touchstone this morning, the S&P 500 at the close of business, you're up 1.4% on the week. We've relinquished a little bit of gains because you've got this triptych of voices at the Fed talking about caution, waiting, reinforcing the data. They want to see a little bit more sustenance in the disinflation narrative. Mester, Williams, Barkin. So in terms of the equity markets, you keep an eye on Reddit, up 11%. They're partnering with OpenAI. You're going to see more and more and more of these strategic combinations for OpenAI. Where to deploy our models, how to monetize. Reddit up at 12.66%. Richemont, where's your watch? What watch are you wearing? We'll talk about the price of watches and which are resilient. Cartier is perhaps a little bit more resilient than your Rolex. You didn't know that, but if you looked at the Bloomberg Subdial Index, you would. Richemont is up. They've got a new CEO. We'll talk about that in just a moment. Hard luxury in watches is resilient, but it's pricing privilege rather than power. Iron ore is up. I thought we'd just give you a little bit of a window into the soul of what's going on in commodities in China. We've talked about copper this week, but iron ore is up because of the China policies, in part trying to clean up that housing mess, lowering the mortgage floor. We'll talk more about that. Nickel is lit up like Christmas tree, but that is because you have unrest in New Caledonia. What does that mean to the constriction of supply? So that is your triptych, as well as a triptych of Fed voices. Now, what are we talking about in China? It's an attempt to boost the housing market. China has unveiled a rescue package. It eases the mortgage rules. It encourages local governments to buy up the unsold homes at affordable prices. Will it work? One lady that potentially has that answer for us is Jill DeC. She joins me now. How significant are this set of announcements, Jill, to cleaning up the excess supply that's out there in China? Good morning.
Good morning, Manus. Yeah, I think at this point, this is really kind of the strongest measures yet, I'd say, that China has really taken to sort of shore up the property market. I mean, you know, you alluded to some of those changes to those down payment ratios. We're talking cutting the minimum down payment ratio to 15% for first-time buyers. I believe that's the lowest in, you know, more than a decade. You're also looking at cutting the, for second homes, 20 to 25%, and then you're effectively scrapping the nationwide minimum mortgage interest rate. So ultimately, Manus, what all of this combines to tell us is that the government knows, obviously, that property continues to be a major strain on the economy. We've seen that bleed through into some of the numbers that we just got out of this big data release earlier today. We know that, you know, consumption remains a big drag on the economy. A lot of that has to do with a lot of the strain that's on the property sector. So you combine those measures that they're taking now with some additional measures where they're trying to encourage local authorities to buy up housing from distressed developers, make that more affordable to people, trying to really stimulate demand there. All of this combines to just these increasingly aggressive measures that the government is taking to try to put a floor underneath this property crisis. Because, I mean, look, even the most recent measures that we've had prior to some of today's announcements are telling us that, you know, we're still not seeing kind of a bottom within this market. I mean, we just had some April data on home prices that wasn't particularly positive. So, you know, maybe this is what that next more aggressive step is needed to try again to put a floor under this issue.
Okay, well, I mean, look, it has been a significant issue in the creation of wealth, the emboldening of the middle class, and that takes us nicely to the spending domestically and traveling. We've had COVID, but about the domestic spending, retail sales are hardly what you call on fire. And then I look at the industrial production. I got on the industrial side of the engine is firing, not necessarily on all cylinders, but the retail domestic demand side is perhaps a little bit less effusive, isn't it?
Yes, Manus, what you're looking at there is signs that we've got a two-speed recovery, that there's this imbalance between supply and demand. So as you said, we're still seeing a lot of those issues within the domestic demand. You know, you pointed to those retail statistics. I believe growth last month was 2.3%. That was pretty significantly lower than the above 3% growth that economists are really expecting here. We've also gotten some recent data, kind of, you know, alludes to the fact that the recent consumer price data that we got out of China, really anemic there, even if it's above zero, it's still not really showing us a lot of momentum. But then, as you said, on the manufacturing side, you've got a little bit more momentum there with industrial output. Exports recently were pretty good as well. But of course, Manus, remember the risk here is that China, while some of that manufacturing data has been pretty strong, they're also dealing with a lot of trade tensions between Europe and the U.S. and China that are really going to complicate the picture there. I mean, we just saw the Biden administration, announce some raised tariffs on some Chinese products, including electric vehicles. Maybe the U.S. isn't a major market for those vehicles, but really just tells us that at least when it comes to the West, there's still a lot of those trade tensions that are driving the geopolitical landscape here. And if China's entire recovery is dependent on the manufacturing sector and what it can ultimately export, that's a major issue.
I mean, just heard from Daniel Pinto with Francine Lacroix there just minutes ago talking about the theater of those tariffs last week. It's not really about electric vehicles per se, but it's about the next 18 months is going to be a serious escalation in that way. And of course, the market turned up for the special bonds, didn't they, Jill? $5.5 billion worth of special bonds. And pretty well bid. Jill, thank you very much. Jill DeCease on the China data. Alfonso Picatiello is the macro compass. He's been listening into this. What do you make of this policy cleanup in the housing market in China? The top line looks pretty substantial and looks as if it's a much heftier policy than we've seen in the past. Good morning, Alfonso. What do you make?
Good morning, Manus. I would say this is the first step that China is taking really in the right direction. And why is that? If you have something akin to an initial balance sheet recession where the value of your assets goes down, equity prices go down, house prices go down, what you want to try and do there is backstop that. And in order to backstop that, you actually need something akin to a fiscal transfer. And the idea that local governments in China can come in and really backstop the housing market is basically a targeted fiscal deficit exercise. Effectively, you will have local governments coming in, backstopping the decline in house prices, and at the same time transferring capital to developers, to workers, to people who are seeing their unsold houses. And this is effectively a targeted fiscal stimulus that is a step in the right direction from China finally there.
What does that mean for the overall macro picture? Oftentimes we spend months not really focused on China, then suddenly somebody switches on the light bulb and suddenly it becomes a lot more relevant to us. How will it permeate? We're looking at tariffs last week, escalating tariffs. There's a Trump Mark II comes back into the White House. That could potentially lead to escalatory tariffs again. When you look at China, how do you look at it in terms of sustaining 5% growth and what that means to the rest of the world?
The property sector in China is vital to their growth engine because even though Xi Jinping wants to move towards a more consumption-based model, the reality is consumption as a percentage of GDP growth in China is amongst the lowest in the world. And instead, if you look at the wealth percentage owned by Chinese people in the real estate market, it's very, very high. Something like 70% of their balance sheet is concentrated in the housing market. So to achieve growth, you need to stabilize the biggest asset class actually out there in the world, which is the Chinese housing market. And I think that is necessary in order to try and even achieve this growth target that China has. Then there will be the tariff story later on, which I think actually, even if you see what Biden is doing here, it doesn't necessarily even depend on Trump being elected. It seems like it's more of a bipartisan thing in the US to try and really put pressure on China when it comes to tariffs.
Yeah, well, we certainly saw that with the Treasury Secretary also as well, sitting down with Anne-Marie Horder this week. More on that in a moment. Alfonso, stay with us. We've got more work to do. Alfonso Picatiello of Macro Compass, my guest this morning on the markets. Coming up, your stories trending on your Bloomberg terminal. This is what we got for you. China kicked off the issuance of this year's special sovereign bonds with a 30-year auction. It drew demand of 3.9 times the amount on offer. Investors were expecting solid demand at the auction, despite the recent headwinds against long-term bonds, including fears of oversupply and central bank warnings that yields were too low. The special bonds are part of a government effort to revive the economy. The U.S. judge has ordered Jane Street to detail a secret Indian option strategy that the firm alleges two former traders took to their new jobs at Millennium Management. It's facing a deadline of next week to provide the specifics about the information it alleges was stolen. Millennium and two ex-traders say there were no secrets and accused Jane Street of bringing vague claims in bad faith. The 13F filings show Renaissance Technology, the quant fund founded by the late Jim Simmons, loaded up on shares in AMC and GameStop before the latest rally. Shares of both meme stocks slumped yesterday, but are now rising again in pre-market trade. This week's swings jarred short sellers, but have been fairly muted compared to the fireworks of 2021. And two AI deals. Reddit is rising in part on a partnership with OpenAI that will bring its content to ChatGPT. The deal will also help the social media company add new artificial intelligence features to its forums. Separately, Snowflake is said to be in talks to buy the startup Reka AI for more than $1 billion. We'll have more on those stories a little bit later with Tom McKenzie joining me to dig into the details. Later this hour, we catch up with Swetha Ramachandran at Artemis Investment as Richemont delivers a new CEO, and we'll delve into the earnings. Coming up, an exclusive interview from the Atlanta Fed President, Raphael Bostic, and Cleveland President Loretta Mester. That will be on Monday on your screens. But up next, we'll have more for you on the Fed with Alfonso Picatiello of the Macro Compass. Context matters on Bloomberg. Good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Incoming economic information indicates that it's going to take longer to gain that confidence. So holding our restrictive stance for longer is prudent at this point as we gain clarity about the path of inflation.
That was the Cleveland Fed President Loretta Mester, and a host of other voices joined her as well, wasn't it? You had Williams and Barkin all calling for this sense of patience and caution and wanting to see more sustained disinflation. My guest this morning is Alfonso Picatiello of Macro Compass, and he writes this: a proactively dovish Fed providing the market with the proverbial Fed put, while nominal growth is still fine, is the best possible outcome for risk markets. Alfonso, good to have you still with me. So, I mean, we're in a sweet spot, aren't we? We've had a lovely rally on equities. Bond yields have dropped. We're repricing rate cuts. So is it sort of like good night and sweet dreams, Goldilocks? I mean, is that what you learned post-CPI for the first take on risk?
a new Fed put is back, Manus. I mean, it unfortunately is quite boring because it dampens volatility, but this is actually the reason why markets are liking it, right? If you look at cross-asset volatility, you have FX volatility very low, equity volatility very low. Bond market volatility is still elevated, but now that CPI numbers come a bit more back in line to that core PCE trending at about 3%, and Powell has told you at the April press conference that he has quite the confidence that at the end of the day, inflation is going to converge to 2, yet he's scared about a labor market weakening. He is proactively dovish. At the first signs of weakness in the labor market, we all know that Powell is going to come in and switch its gear to a very, very dovish stance. Well, guess what? Nominal growth is still fine, and you have the Federal Reserve telling you, don't worry, I have your back. The labor market weakens, I'm there for you. This is something I know of as the Fed put.
So suddenly the dual mandate, Danny and I have talked about this before, which is that there was the primary mandate, which was to temper inflation, tame inflation, and really it still is verbally their #1 goal. But suddenly the dual mandate becomes much more important.
Yes, I mean, if you look at the labor market, you can't really blame Powell for being a bit worried about some of the weakness under the hood, right? I mean, for example, let's take a look at the share of permanent job losers as a percentage of the total labor force. You know, the share of permanent job losers is steadily increasing. Namely, if you lose your job in the US today, it's quite hard to get one back pretty soon. And so you go into that category of permanent job losers. And every time that has happened in the past, it has been a prelude to a higher and higher unemployment rate. U6, broad unemployment rate, is already about 7.5%. And also the Kansas Fed labor market indicator, which is a gauge of 24 labor market indicators, is also weakening and suggests unemployment rate should be moving higher. So I guess Powell is looking at these type of early indicators and getting a bit worried, right? So he wants to make sure it doesn't ruin this 90-95 soft landing party which is going on in markets. And markets love it, you know. There is a Fed put, there is somebody effectively having your back.
I'm always happy when I know that there's a backstop to the worst case scenario. So tell me this then, I had BlackRock with me yesterday. They want to be longer of the shorter end of the curve. They want to be long 2s because they think the duration may retest 5%. You've just launched a new hedge fund, so I'm curious to know how you're going to deploy. Congratulations on that. So talk me through, what are the hedges going to do? How are you going to deploy? Are you going to deploy at the short end? Are you going to buy 2s? Are you worried that the 10s will retest 5s? Talk us through the initiating trades of your hedge fund. Congratulations.
Thanks, Manus. It's it's a pleasure, and I'm proud to be able to launch my own macro fund. Look, if I look at the bond market today, what I see is that the market has completely given up on any odds of a recession, right? You're getting in options something priced at about 8 to 10% probability, even in the UK, even in Europe, and also in the US, of a recession over the next 12 months. Now, it's not my base case, but when the market gives away very compelling probabilities, it's not a terrible idea to try and get in some of this convex exposure via options, because later on in the next 6 to 9 months, you might have some wobbles out there in nominal growth, and then you get handsomely paid through convexity through these options. So I tend to agree with BlackRock that the front end of the curve is where most of the convexity of the returns might come from bond markets. Obviously, that as well comes with a bull steepening of the yield curve that everybody has been waiting for now for a couple of years, I would say.
What's the tail risk? Is it Bank of Japan raising more aggressively than we all presume to defend the yen? Or is it the ECB and the Bank of England out-cutting the Fed? I'm trying to balance which is the bigger interlocker for bond markets globally.
Yeah, another trade I really like here, Manus, is to receive European interest rates and pay US interest rates. So basically to be more dovish on the ECB relative to the Federal Reserve. The bond market has now repriced basically the European Central Bank to unwind over the next 2 years the same percentage of the previous hiking cycle as the Federal Reserve. But actually, if you look at the European economy, it's pretty clear that the fragilities that there are in the private sector and the exposure to higher interest rates in Europe are much higher. For example, the European lending system, I mean, corporates receive a lot of loans from banks, while in the US, corporates borrow mostly from capital markets. And lending from banks in Europe is often based on floating rates. That means corporates in Europe are already feeling the pressure of higher interest rates, because on variable rate loans, they get the pass-through from higher interest rates immediately. That might come as well with more weakness in the labor market in Europe. And in general, the ECB tends to be more dovish than the Federal Reserve. When you're offered the opportunity to buy a European cutting cycle pretty much at the same levels of a US cutting cycle, I think that relative value opportunity looks good.
Okay, Alfonso, thank you so much for being with us. We wish you well on raising the funds and getting out there amongst the fray of the hedge fund world. Alfonso Peccatiello of Macro Compass. Now, we mentioned some of the metals and the miners at the start of the show, and I think it's worth just reflecting on some of these prices, because you have, look, Jeff Curry has been on TV this week, and he's on Odd Lots again, evangelizing about copper and the strength therein. We're still comfortably above 10,000, but when you talk about China and the greening capex in China, it was 100% last year, it's 30% this year, so you are looking at a real momentum there. Nickel is up. Again, we have unrest in the #3 producer in the world in New Caledonia. How long will that endure? We're not sure, but it's up 5.7%, and also it's a key component in many industries. Iron ore up 1% as China goes for a cleanup on its housing industry. Metals are bid this morning right here on Bloomberg. Coming up on the show, we're going to take a look at what else is making news headlines around the world. It's dawn in New York, and we're flatlining on SPOO's 53.18.
Names in tech are on Bloomberg.
There's a natural tension between the need of a supplier to scale and the need of the customer, the car maker, to differentiate, try to make something that is unique.
We have a long-term partnership with Tesla, and it's still strong, but Tesla is not the only partner that we're seeking, and we want to diversify and really make the EV market in general stronger and sustainable.
All these devices becoming smart devices. They all need a brain inside that helps them learn what to do. That brain inside is ARM.
I'm believing the next user experience is going to be based on Gen AI on the phones. We're optimistic that we could start to see devices as early as this year.
Our job is to provide great index products and then to be the listing exchange for those index products that allow investors to invest in all sorts of tradable instruments, including now Bitcoin.
Nobody covers technology like Bloomberg. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
The U.S. economy is chugging along pretty well.
We've had good, healthy markets for quite a while.
There's 1,000 things that can go wrong tomorrow, but right now everything's in pretty good shape.
I think the chance of something going wrong is higher than people think.
Where it'll be in 6 months, how much of that slowdown we see in the bottom quartile, we have to watch the data very, very carefully.
Whatever the world is pricing it for a soft landing, I think it's probably half that.
Right now we have a no landing, honestly, a 2% growth rate, because you can't say it's a soft landing.
There are a lot of inflationary forces in front of us that, may keep it a little bit higher than people expect.
What the Fed is doing with rate structure is having the impact they want. On the other hand, the economy's kind of there, and now we got to be careful we don't overshoot the other way.
I think, they are doing the right thing to be patient right now.
A veritable feast of CEOs, bank CEOs this week on Bloomberg. Jamie Dimon, David Solomon, and Brian Moynihan weighing in on the U.S. economy and Fed policy. And where did they choose to speak to? Bloomberg TV. It was the investment conferences in France this week. Time now for your front pages. This is what we got for you on Friday morning. New York Times, let's kick it off there. NATO allies inching closer to sending troops into Ukraine to train the Ukrainian forces. And that's the critically important point. Now, the move would draw the US and European more directly into this war. Ukraine's manpower shortage has reached a critical point as Russia advances. Next up, we've got Washington Post. The Biden administration announcing it will end new coal leasing in the Powder River Basin. Now, this is a big step for the Biden administration. Powder River Basin produces nearly half of the coal here in the United States of America. And a quick snapshot of Tesla. This is all about the shareholder votes. This is in the FT. It'd be like climbing Mount Everest as it faces a number of shareholder votes. Relocating to Texas, Elon Musk's $56 billion pay deal. Tesla's annual general meeting is on June the 13th. We're going to kick into gear with Richemont. The Richemont stock is rallying. We're going to talk about the new CEO and the results.
One of my greatest advantages, I own my company 100%. No board of directors. I make a decision, we move. And I had a guy say to me, runs a big media company. This guy ran a major division, Warner Discovery. Okay. It was just Warner Media at that time. He says, you know what, when we sit in our meetings, we don't talk about Disney. We don't talk about Paramount. We don't talk about Sony. He goes, you know who we talk about? I go, who? You. I said, really? He goes, yeah, you. I go, why? He goes, we are giant battleships, and you're like a little speedboat. And if there's gold on the beach, you run rings around us, get to the beach, take the gold, and by the time we turn our battleship around, you've already taken the gold. I go, that's right. I'm always gonna be that entrepreneur. Mm-hmm. I started my company from my dining room table 30 years ago. 30 years ago. And I started by calling every television station, asking them to carry my once-a-week show. On average, they all said no 50 times, and I worked through about 50,000 no's to get 150 yeses. That guy that was at that dining room table trying to pay his phone bill is that same guy today, 30 years later. That fire is still in my belly. I still run scared, and I'm still running after that vision of building the world's biggest media company.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
From our global headquarters in New York, I'm Manus Graney. Let's set your agenda. The bull run hits pause as Fed officials call for patience on rate cuts. China gives its ailing property sector a boost as new data points to a lopsided economic recovery. And we have two AI deals. Reddit rises on its partnership with OpenAI, as Snowflake says it's in talks to buy the startup Reka AI for more than $1 billion. It's always nice to have $1 billion deal on a Friday morning, a very good morning. If you hadn't heard the message from the Fed, it was reaffirmed 3 times by a triptych. Yes, you have Mester, Williams, and Barkin, which is temperance, weight. We're not there yet. S&P 500, I mean, we've rallied by 1.4% this week. It's been a good week for risk, 4 weeks of gains. If we manage to put some green on this screen by the close of business today, you'll have 4 weeks of gains at well over 5%. Reddit is on the bid this morning as we have them partnering with OpenAI, and you're going to see a cacophony of these kind of bids and deals with OpenAI. The stock is up 14% and change at the moment. We're going to talk about Richemont in just a moment, whether you've got a Cartier on your wrist versus your Rolex, which one retains value, and what is it that jewelry stands out in Richemont. We'll talk about that in a moment with Swetha. It's up 5.6% at the moment. VIX, by the way, is at the lowest so far this year. Twos have traveled lower this week by almost 13 basis points at one juncture. 478 is where we are. You want to be longer of the short end. We've just heard that from Alfonso Peccatiello, along with BlackRock yesterday. UBS say you will be at 385 on 10-year paper by the end of the year. And then when it comes to sort of how do you manifest the China story, it is the iron ore. This is the Chinese trying to clean up and create floors in the housing market for them, encouraging local governments to buy up the excess. Nickel is also bid this morning. Bottom of your screen is up 5.3%. We have this disruption in output in New Caledonia. That is the world's #3 producer of nickel. Indeed, Macron cancelled his visit to Normandy to have an entire discussion with the French advisors on what to do there. So that's just an indication of what's going on in iron ore on the back of the Chinese story and nickel. Let's talk about the earnings. I mentioned it to you. Richemont is rallying as the luxury group posts a resilient fourth quarter sales, and they announced a new CEO. So this is the performance, as you can see, over the past couple of days. Swetha Ramachandran joins me now, fund manager at Artemis Investment Management. Swetha, thank you so much for being with us. The new CEO, he's been in charge of Van Cleef. He comes with pedigree of turning that brand around and doubling the sales. Do you like the appointment?
Yeah, I think the fact that he's been at the Richemont Group for 24 years now and has led Van Cleef for over a decade speaks quite positively to the fact that there's a continuity element to this as well in terms of preserving what's special about Richemont's jewelry brands. But also it's interesting that the choice was Van Cleef appointee, given that that's a much smaller brand relative to Cartier, speaking to perhaps the latent potential in that brand where it could be a lot bigger than it is today as well.
And I like how you talk about Richemont, because you'd say it's a slowdown, not a meltdown. And indeed, Johan Rupert talks about his uncertainty of what's happening in China. We'll come to that in a moment. Now, when you say it's a slowdown and not a meltdown, what is it that gives them perhaps that differentiation?
I think this is the theme we've seen throughout this reporting season among the stronger players versus the weaker, is that as we're going through this period of sector normalization, which is growth coming back to its historical trend rate versus 20-25% that we've seen in 2021, 2022, there are some companies that are better able to navigate that slowdown than others. And those tend to be the ones that are pretty much the category leaders. This would be, say, LV's brands within the fashion and leather goods segment, or Cartier and Van Cleef within jewelry, in addition to some brands that are enjoying some very strong brand momentum, such as Prada at the moment, as well as Moncler.
I was interested when I looked at the breakdown in your notes. We've gone from watches being 55 double nickel of the Richemont sales to 35%, and yet we spend so much time talking about their hard luxury. When I look at the watches market, it's interesting. We were looking at the Bloomberg Subdial Index. This is 50 of the most traded. That's at a 3-year low, but the house of Richemont, with their Cartier, with their Tank and their Santos, is outperforming Rolex. And this is an interesting sort of differentiator, again, in terms of product and price point within the house of Richemont.
Yes, exactly. And actually the watch segment, which a lot of people have been quite fearful of, came in much better than expected, with sales only down 1% versus expectations that things might be worse. Of course, we had Watches of Switzerland report yesterday, where they also pointed to a bad outcome for watches as well, where the outlook appears to be turning a bit more benign now that sort of crypto frenzy, as well as revenge shopping in the wake of the pandemic, has died down and we're more to a normalized trend growth.
One thing that caught my eye was the Japan and the Americas sales in this set of numbers from Richemont. I mean, Japan up 20%. They were looking for a bump of 12%, and the Americas up 5%. We were looking for an estimate of just over 3 1/8. Is the currency, is the tourist driving into Japan something to do with the Japan number? Just talk me through how Japan shone so brightly in this set of numbers.
Yeah, absolutely. So tourist demand, I mean, we can see the Japan numbers as a clear function of the weakness in Asia Pacific elsewhere, which was down 12%. And that's really because a lot of that spend from China is being diverted by Chinese consumers, is being diverted to Japan as Chinese consumers are now able to travel again. And also they're attracted by duty-free shopping as well as the cheaper yen. The Americas, I think, is much more of a function of domestic demand, which has actually accelerated. The US consumer returned very sharply after the pandemic to luxury, then had a bit of a slowdown as the impact of inflation took its toll. And now there appears to be a re-acceleration after a sort of 6 to 12 month digestion period. And I think Mr. Rupert called out on the call that there are new markets emerging in the US, Austin, Charlotte, cities that they didn't have a presence in, where previously they were focused on the western and eastern coasts. Now that a consumer in America is much more broad-based.
And that's going to come down to, as you describe it, pricing as a privilege more than a power. Can you just elaborate on that? Because if I look at, I mean, Gucci is, it's having a really, really tough time. They just don't have pricing power. Hermes does. It has brand cachet and pricing power. That's manifest in the numbers. So where does Richemont stand in the capacity to have privilege more than power?
Yeah, I think this is a theme that's increasingly going to become important because in 2021, 2022, everyone took up pricing regardless of really whether their brands were strong enough to withstand that. And if there's anything luxury brands hate, it's discounting because that destroys brand equity. So in a disinflationary period, they're never going to, they're very unlikely to bring absolute price levels down. They may adjust it through mix. So what we're going to see going forward is really a separation between the pricing halves, i.e. those with pricing privilege versus those without. And there are very few brands that have genuine pricing power, which I call pricing privilege. And those would be brands that are pretty much the leaders in their categories. I think Cartier and Van Cleef are among them, but Richemont has always been much more tempered in its attitude towards price increases, wanting to give the consumer good value, which is also why I think it has been able to withstand the slowdown much better than some of its competitors. And I think the pricing outlook this year will be much more muted, but that will be to the favor of the share gainers such as Cartier and Van Cleef.
And who do you think is going to not survive? Who do you think is going to deliver the most robust performance in a, let's say, disinflation environment, which settles somewhere around 2 to 3%? Because the inflation world that we lived in the past 10 years is over. So we're in a much more sort of quasi-constant state of inflation. Who's going to deliver the best in that world?
Well, the good thing about these companies is that they tend to generally be able to pass through pricing of about low single digits every year, which is enough to offset inflation. But I think the scale players have a much bigger advantage here. Those would be the likes of LVMH, Hermes. I would count Richemont among them as well, because their marketing budgets are substantial. If you look at LVMH's fashion and leather goods segment, their marketing for that segment alone is the entire top line of Tod's and Ferragamo put together. So I think those, the mega brands will still be the winners in the world going forward.
Okay, Swetha, thank you so much for being with us this morning. Let's see how the new CEO gets on being in charge. We'll will Johann Rupert let him drive the bus as he wants? That's going to be the interesting conundrum. Swetha, thank you so much. Swetha Ramachandran there of Artemis Investment on Richemont and the luxury sector. We'll pivot to tech. Reddit forges a partnership with OpenAI, bringing its content to ChatGPT. The details on the deal. That's next. Context matters on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Your Friday edition of Bloomberg Brief. I'm Menace Cranny in New York. So shares in Reddit, they're ramping up this morning pre-market as the company unveils a partnership with OpenAI that will bring its content to ChatGPT. A deal made in heaven, is it? Tom McKenzie's with me to talk me through the details. Symbiotic is the word that comes to mind. Mutually beneficial for one another. Who gets what in this deal, Tom? Good morning.
Yeah, absolutely, Manus. It is a two-way deal because, of course, OpenAI gets that data that, of course, Reddit has described as very valuable in the past in the lead-up to its IPO in March. OpenAI gets the data from the Reddit social media platform and is able to train on that. We know there is a data deficit right now for these large language models, so that's helpful for ChatGPT, of course, the product that OpenAI is behind. What Reddit gets is some of the use cases, so some of those models and some of those top-line software applications that are going to be built in now to the Reddit platform that have been designed and created by OpenAI. So it is symbiotic. And of course, the pitch that Reddit had made up until, and then the lead up to that March IPO was, we have this valuable data, we can sign these licensing deals, and that's going to bring in the revenue. And so far, they've signed deals worth about $200 million. We don't know the value of this deal. A deal they struck with Google, for example, about $60 million. So they are living up to this. And as you said, the share price has reacted. It's up, what, 65% since the IPO. Interestingly, Sam Altman of OpenAI used to be the CEO of Reddit for a short time in 2014 and was one of the largest shareholders up until and leading up to that IPO. So these two companies know each other very well.
Yeah, I think we're going to see a lot more of these deals, these relationships, is my sense, with OpenAI. And then we begin to understand the real monetization and then the power of the data. Never far from $1 billion deal, are you? Snowflake is in talks to buy Reka AI. I mean, why not? Let's shuffle $1 billion deal onto the table for a Friday morning. Talk me through the reasoning and the rationale for the deal. Tom.
Yeah, just a mere $1 billion. And the valuation part of this story is really, really interesting. And I'll get to that shortly. So yes, this is Snowflake, which of course is the data analytics in the cloud business. The stock is down about 17% year to date, buying, according to this report, or at least in the process of doing a deal, $1 billion for Reka, which makes these large language models and a lot of these applications. So the idea would be that they absorb this Snowflake into their own business, because this is a company, Snowflake, that either gets disrupted by these AI models or has to adjust to it organically or by doing a deal like this. So we watch to see whether it closes. The valuation part of this, Reka was started in 2022, valued at $300 million in 2023, and now it has this $1 billion price cap on it, according to this reporting. We'll see if it closes, but again, Snowflake has to adjust, and it seems like they're going to Reka and reaching out. If this deal helps to close the gap, then that could be consequential.
Okay, Tom, great work on a Friday. Wish you well in London. Tom McKenzie there, rounding up the tech news for us. Let's stick with the AI theme. Bloomberg's Emily Chang spoke exclusively to the CEO of Salesforce about the future of technology and working with activist investors.
I think I might be one of the few CEOs that actually really enjoyed working with these activist investors. I had never heard so many great new ideas in my career, including such out-of-the-box thinking. And look, we were able to really transform and evolve Salesforce over the last year, and you can see it with our incredible financial results that we had last year and our idea that we're able to continue to move forward with these incredible new characteristics of our company. In our last earnings result, we even talked about that we've started to create a dividend. That's something that was beyond my imagination even just a few years ago. So it's exciting to be the #1 CRM, to help companies connect with their customers in a whole new way. Right now, we're about to enter an incredible new world, which is the world of artificial intelligence and how it's going to transform these customer relationships. And I think we're about to see some technology that we never thought we'd see in our lifetimes. We're going to see just some incredible new ways to run our businesses.
Competition in CRM is fierce, Mark. You've got ServiceNow trying to poach a bunch of Salesforce employees. I believe they stopped using Slack after you bought it. They're trying to build more of a consumer brand. They started their own Trailblazer program. Are they trying to pick a fight with you?
Well, they're an interesting company. You know, I just think they need to be careful. They might be getting a little ahead of their skis. We just replaced them at Disney. Of course, we already had run Disney stores and Disney guides in the park, and we had done a lot of things with Disney with their customer relationships. But I think everybody knows that when they went to have Disney Plus and wanted to have a call center, and they chose that company, well, unfortunately, Salesforce had to come in and rescue the entire operation and rebuild all of the customer success and call centers for Disney, and which was at that point had been called out as a marquee customer there as well. Salesforce is actually a tremendous company that does real customer success and delivers solutions in sales, service, marketing for so many great companies around the world now. You know, obviously standardized at Disney, but for so many other great organizations, banks, insurance companies all over the world, and I think we're doing pretty well on our own.
Salesforce CEO Mark Benioff there in an exclusive conversation with Emily Chang. Let's turn our attention to Boeing, never far from the headlines at the moment. The troubled plane maker holds its annual general meeting. Now, while such gatherings are offering mundane affairs, the virtual session will be closely watched for any hints that the top executives provide on the state of affairs. Sid Phillips is with us now. Sid, good to see you. Why has it gone to such a level of significance? I mean, their hands are tied in terms of what they can say about a lot of issues, a lot of legal issues. So why are we so focused on today?
Morning, Manus. So essentially what's really important today is basically how Boeing navigates the next CEO change. I mean, Dave Calhoun, the current CEO, has said that he's stepping down at the end of the year. And the new chairman, Steve Mollenkopf, is running the CEO search process. And so everyone's looking for any signs of what the next CEO, who the next CEO is going to be, or what characteristics Mollenkopf's looking for in that next CEO, what sort of stage that process is at, and essentially all eyes are on what Boeing does going forward in terms of what leader it chooses and how it sort of gets out of the mess that it's in at the moment.
And it is in a mess. Where do you think the real wrinkle points will come? Is it going to be the reappointment of directors? Is it going to be on remuneration packages? Because shareholders, institutional and retail, will have some vexation with remuneration.
Absolutely. I mean, we've already seen CalSTRS talk about how they are voting against the appointment of some directors, including Chairman Mollenkopf. And we've seen others like in the Florida authorities talking about how they will vote against Calhoun's appointment. And both of them have said they're going to vote against the company's recommendation that they accept executive compensation. So it's really a very tricky process for them. And even if the motions go through as they normally expected to, it will sort of show that shareholders and investors are quite concerned about how the company is going, and they're sort of expressing their discontent with Boeing.
And what are the other issues that Boeing has got to deal with now? Because, of course, they've got an investigation, their production is being artificially held back. But again, it's about reassuring the regulators that their checking processes are fit for purpose. So what do you think the biggest issue is in the very, very near term?
So they've got a pantheon of issues at the moment. They've got the issue with the SEC that Bloomberg broke the other day. They've got where the SEC is investigating whether the company made misleading statements in the aftermath of the January 5th door blowout and the subsequent sort of grounding, as well as the investigation since. They also have the latest issue with where they have 4 weeks to come up with the DOJ talking about scrapping the deferred prosecution agreement that they agreed in 2021. And they have 90 days to come up with a plan for the FAA. So they've got fires on multiple fronts, and their production is constrained at the moment. The FAA has forbidden them from ramping up max production. They have a whole heap of whistleblower issues. And so, yeah, they've got multiple fires that they have to put out at the moment. And the next CEO is in for a tough job at the moment.
Okay, Sid, thank you very much. Let's see how the AGM goes. Sid Phillip will be tracking that story through the day. Coming up on the show, we'll set you trading day this Friday. Context Matters on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Good morning.
Good morning. This is Bloomberg Surveillance.
This is Bloomberg Daybreak Europe.
You're watching The China Show.
This is Bloomberg Technology.
This is the countdown to the close.
Welcome to Balance of Power. This is Bloomberg. Season is here.
This is a get out the popcorn moment.
Across the board, just pummeling of expectations.
Earnings matter. That's really clear.
Bloomberg is first to break the numbers.
Hey, folks, we've got Microsoft.
Apple earnings crossing the wire. Alphabet, wow, coming in way above expectations.
Hertz driving in the opposite direction.
A lot still to come.
With the smartest insights.
Meta's kind of damned if they do and damned if they don't.
Is this their iPhone moment? I view this as Operation Kick the Can to August.
Continuing coverage on Bloomberg. Context changes everything.
It's your Friday edition of Bloomberg Brief. I'm Manus Cranny in New York. Here's a look ahead for next week. More Fed speak. Chris Waller and San Francisco Fed President Mary Daly will speak. Boeing holds its shareholder meeting later today, and on Sunday we've got the Fed Chair Powell speaking at Georgetown Law commencement ceremony. Some stocks for you to watch. We touched on some of these, but to crypto world, Coinbase is rising. We have a report that the CME is in discussions to launch Bitcoin trading. You got Reddit, we touched on that, forging that new partnership with OpenAI, and it will bring its content to the chatbot ChatGPT and other products. And then Take-Two falls after the video game company gave weak full-year forecast after announcing highly anticipated Grand Theft Auto 6 won't come out until the fall of 2025. You're all going to have to wait until then. Look, it's been a big week for bonds. At one juncture, 10-year government bonds in the United States of America dropped by 18 basis points. We have pared that back somewhat. You've had temperance from a number of Fed speakers, Mester, Williams, and Barkin, cautioning and wanting to see more sustainable disinflation. The bond market is ticking ever so slightly higher, and UK gilts. Again, one narrative that has come through really strongly this week from all of our guests has been the proclivity for the ECB and the Bank of England to move more aggressively than the Fed. That is the state of play. We'll hand you over to Bloomberg Surveillance and the team from the Bloomberg Brief team. A very good morning.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on
that we are only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
When you're facing a momentum market, to say that momentum is going to stop on a dime is a very difficult call.
One of the forces that is propelling the stock market higher, of course, is the productivity story.
You have more labor force engagement. You certainly have the support from the labor market.
Both the labor market and the consumer started from a position of strength. So when we think about cooling, it's cooling from a very strong base.
When we look at the data, we see things slowing, but it's cooling but not cool. And we're not expecting things to fall off a cliff right now.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get you to the weekend, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance, closing out the week and heading towards the weekend, looking for 4 weeks of gains on the S&P 500. Light on data this morning with a sprinkle of Fed speak. Here's the lineup. Fed Governor Waller, President Kashkari, President Daly, and for the really committed, on Sunday, a Chairman Powell commencement speech later this weekend.
I'm sure all around this table are very committed, and some of those members on the screen, Jonathan, are double dipping for the week. Yesterday, the Fed speak kind of the same, higher for longer. We need more patience to gain confidence. But I want to bring you to Raphael Bostic. If things that don't go that way, I'm not locked into a particular course of policy, but if they do go that way, he can see a cut by the end of this year.
I love how that's the most dovish thing you could get, is one policymaker saying, hey, maybe we'll cut at the end of the year. But I think this week has really showed us there's a difference between relief and surprise. The data we got was relief. Surprise was the first quarter, where you have to reshape things. The Fed speak needs to change. This week was relief. The market maybe starts to see some buying. It backs off, and you get Fed speakers who, again, don't change their tune.
The same thing. I think we all know the song by now. Here are the lyrics. We need more time. It would take longer to gain that confidence. President Mester, President Barkin, I just think it's going to take a little bit more time. President Williams, I don't expect to get that greater confidence in the very near term. What is greater time, Danny? What is that, a couple of prints, a few months, 3, 4, 5?
This is the issue, is that you need to see a trend, and the data is very nonlinear at this moment. So it's not even about a couple of prints, it's about seeing that trend. But this is the problem with the data, is that to some degree, these measures are really outdated. They account for a monolith of an economy. We don't have a monolith of economy. We've talked about this how many times. It is a K-shaped recovery. It is hard to get and grapple with this data, and we're seeing that from the Fed. They need more time and they need more data, because the data doesn't show us very accurately what's actually happening.
That's the United States. We need to talk about China as well. Some data out of China overnight. Allow me to go through it for you. Consumer spending, slowest since 2022. Industrial output, that's where the upside surprise is. And right on cue, the commentary, the politics, coming from the NEC director, Lael Brainerd. China is using the same playbook, Anne-Marie, it has before to power its growth at the expense of others by investing in significant industrial overcapacity.
And it's not just Lael Brainerd. This is what Treasury Secretary Janet Yellen said to me earlier this week. This is what we continuously hear more and more out of the Europeans as well. This concern about this manufacturing base in China and this overcapacity they are dumping on other markets. What China is going to end up doing now, they tilt even more towards manufacturing, is that they're going to become more vulnerable to tariffs like the ones we saw earlier this week from the Biden administration.
And I can't help but wonder, Anne-Marie, if that's why China's response was so mild. I mean, we all knew that tariffs were coming, right? Every single journalist knew it. Anyone knew that at some point we're going to get tariffs from the U.S. China had such a long time to prepare for this. They could have day of hit the switch and unleashed tariffs against the U.S., but they didn't. And again, I can't help but wonder if it's because of this data.
We'll catch up with Andy Curran in about 10 minutes' time on this story down in Washington, D.C. Here are the scores for you this Friday morning. Equity futures on the S&P 500 just about unchanged. We're going nowhere. We're higher by a single basis point on a 10-year. Your 10-year yield, 4.3866. And in foreign exchange, the dollar showing a bit of strength against the weaker euro. We'll talk about what the ECB's got to say about the next move and the move after that. 108.43 on euro dollar. Coming up this hour, we'll catch up with Jeff Yu of BNY Mellon on why you should remain overweight US assets. We'll speak to Ender Curran as China takes new measures to prop up its economy, and Gilles Moek of AXA Investment Managers on the independence of the ECB. We begin with our top story, US stocks and bonds giving up some of their post-CPI gains. Jeff Yu of BNY Mellon saying this: we stress that global investors remain heavily overweight US assets, including the dollar, treasuries and US equities. Irrespective of the Fed or US macro, concentration risk needs to be considered, and we anticipate diversification to be a feature in the second half of the year. Jeff joins us now for more. Jeff, let's start there. Why wait until the second half of the year, only a few months away, to start considering that?
Well, really, it's markets are waiting for confirmation, right? A confirmation that we will get policy divergence. Other central banks can go their own ways, irrespective of the Fed. And secondly, of course, they need to know, where the Fed is as well. We're still looking for easing now to begin in September, later than where we were compared to, say, 6 months ago, and also, no more shocks elsewhere. And in addition, right now, China is really coming through less about the tariff side, but today the focus wasn't even on the data. It's about the rescue of the property sector, or the supposed rescue. So that really opens up Asia in particular. If you ask me, where are clients least allocated based on our data relative to benchmark, clearly Asia is where it is, and maybe there's an opening there for flows to redirect.
Well, let's build on it then, Jeff. Overweight US assets for now. Do you think we might be seeing perhaps US exceptionalism playing out fully? Peak yields behind us, peak US dollar behind us?
Well, let's go through them one by one, right? Looking at the dollar, so we think if you want to go on the short dollar side, then dollar yen's where the biggest downside risk is. But that's as much a Japan story, a yen story, as a dollar story. We've discussed euro dollar before, right? That's where we think dollar is going to be far more resilient. Cable probably somewhere in between. In equities, can we actually see earnings pick up, especially in Asia, driven by some better reflation out of China? We're seeing global commodity reflation on the industrial side as well. That can benefit Latin America. And we're seeing flows into equities and also into FX as well, earning some carry. So pick your sector, pick your asset very, very carefully to diversify away from US assets.
Jeff, and John kind of hinted at this later, and this idea of the ceiling of the dollar. Isabel Schnabel was talking yesterday and essentially said that what happens in July, it's too soon to say. We need more data. We're getting more to an environment where ECB policymakers are talking about this idea of one cut, and then they just hang around. What does that do to the dollar? Because a lot of its strength was predicated on a Fed that was pausing and a cutting cycle starting for the rest of the world.
Indeed, and if you look at euro dollar's reaction function this week, for example, they're far more reactive to whatever happens to the Fed rather than what's going to happen to the ECB. So somewhat perversely, I would say the market needs a euro shock right now, an ECB shock. So I don't think that the ECB can afford to wait until more data points come through. So at some point, you're going to need consecutive cuts. So I'm looking for them to start in June, pretty much confirmed. July is needed as well, and then September. So far more to the extent that euro dollar will start reacting to downside euro data, to a dovish ECB, because to be frank, that isn't happening right now. And I think that is a bit too asymmetric for asset allocation.
Jeff, going into next week, the yen is in focus because G7 finance ministers will be meeting in Italy. Are you expecting any more language when it comes to foreign exchange?
Yes, I am, but probably will be behind the scenes, and perhaps there will be just greater concern, expression of concern that some currency misalignments, without pointing fingers, can be distortive for monetary policy. But again, let's go back to central bank divergence. It's fascinating to look at when Sweden cut rates, for example, they're citing issues with the Fed as an inhibitive factor rather than the ECB, and we know the Eurozone's Sweden's largest trading partner. Indonesia hiking rates against expectations, worried about the Fed, and Latin America too. So I guess from Japan's point of view, they would say, well, if your policy is far too tight right now out of your own needs, then there's not much we can do either. So a bit of both ways rather than pointing fingers only at Tokyo.
Jeff, I wonder why Secretary Yellen cares so much. And my mind goes towards maybe the prospect of selling treasuries to manage the currency risk abroad. Jeff, is that something we need to be focused on?
100%. So we're saying global investors are overweight treasuries right now, but looking at our flow data, cross-border flows into duration, I would say lackluster at best. It's positive, but not as strong as domestic investors. And now think about this, if not just Japan, but add all the other Asian central banks worried about their own currency weakness importing inflation, if they need to start to liquidate some of their reserves as a buffer, and those reserves will be in treasuries, then would the Fed want that to be happening, while they're managing their own policy as well? They've had to slow balance sheet unwinding, for example, had to slow QT. So this is really setting things up. I think the rest of the world will wait for US elections, will wait to see what the fiscal plan is up ahead before making a firmer decision. But this really is going to be a medium to longer term theme. Fiscal, everyone needs to look at fiscal tightening. And to be frank, UK probably will need to do a bit better as well, when the next government, comes in, irrespective of what comes through. Global funding in reserves for sovereign debt, that is going to be a big question.
Jeff, are we seeing early signs of that with the pickup in gold so far this year?
Yeah, I think not just this year, but the pickup in gold, irrespective of what happened to US real rates, that decorrelation is a sign that people want to diversify, want some protection, not just against the US, but just global fiscal pressures. So that's why the OECD highlighted fiscal tightening has to continue globally. And again, we're just going to see where the US leads, maybe the rest of the world will follow. Oddly enough, I'm less worried about the Eurozone right now, even the southern countries, because of that joint issuance framework, because of the multi-year financial settlement. For the Eurozone, debt issues probably another 2 or 3 years away. But for the US, UK, some other areas with high levels of net debt to GDP, I think that's something that they need to look at up ahead. And global investors are watching very carefully.
Well, to that point, Jeff, in the first quarter, we saw China sell a record amount of US treasuries. It is building across the globe. In fact, so much so that now private foreign buyers are bigger holders of treasuries than foreign central banks. Jeff, what does that mean for bond market volatility? Because central banks are buyers and holders. They are not trading in and out. What does it mean for the biggest base to be investors instead?
So this is something that Madam Yellen probably would want to discuss with her Japanese counterpart. So how are they actually executing? So slow declines, slow liquidation, given the size of the treasury auctions right now, they are absorbable. But if you have central banks coming in out of necessity, we saw this during the early days of the pandemic, before the Fed put in the facilities to actually use repo rather than face forced selling by central banks. If you get a lot coming in, like the clips that the BOJ and the MOF in Japan were apparently doing, some market estimates, $20–30 billion in a day, that kind of a size on a regular basis will be very difficult for the US to handle. So that is absolutely should not be the market's base case scenario. But these are the things that we need to consider with the treasury market. And going back to the point, do you want to be long-term investors? So that's where perhaps for the sake of stability, some degree of fiscal restraint needs to be needed. But are we really hearing that, from both sides of the debate in the US right now? Probably not enough.
Is fiscal restraint even enough, Jeff? If we're talking about these levels and the potential for them to continue, as you said, the Fed had to slow QT in part because of that. Is there some element where maybe they need to stop, where even they can continue the project of QT if we see central banks selling like we have?
So certainly it is a comprehensive project, and the Fed will be looking at that. They'll be managing and they'll be looking at treasury and volatility very, very carefully. But here's where the US, gets perhaps a freer pass compared to the rest of the world. What does the US have? Productivity, right? So another way to basically grow your way out of debt is through productivity growth. And here's where US equities, the tech scene, it is just so far ahead of everyone else right now. If you look at the growth breakdown from the OECD, for example, so much dependence on public sector investment rather than the private sector contribution to growth, whereas in the US, you've got both sides of it. So that's why, even though we are worried about US fiscal, the markets will be willing to extend that confidence in US productivity, US innovation for a long time to count, and that's something I'm not questioning right now.
Hey, Jeff, you're one of the best. This was deeply thoughtful stuff. Jeff Yu there of BNY Mellon breaking things down. Bramo wishes she was here and didn't start this weekend early, because that is real Bond Bear type stuff from Jeff Yu of BNY Mellon. He mentioned China as well. So the latest from the PBOC, cutting the minimum down payment ratio to 15% for first-time buyers 25% for second homes. The previous ratio stood at 20% and 30%. Also, Danny, Beijing telling local governments they can acquire homes at reasonable prices and turn them into affordable housing.
I mean, this is a project that's going to take a long time, right? If that's what you're doing, if you're converting housing into affordable housing. But at the same time, John, I mean, this is going to put so much stress on the banks. You're compressing their margins even more when it comes to mortgages. Banks are something, what, like 13% of the CSI? I mean, this is a big sector for China that they're now putting under pressure in trying to solve housing.
But they have to solve this property market. It's been the absolute pressure on China in terms of their recovery and their growth. Today, they have a whole host of individuals from state, local, top officials, banks, discussing what to do when it comes to the property sector. Why this urgency right now? I think because they realize they have no choice.
We'll catch up with Nada Curran in just a moment. If you are just joining us, welcome to the program. Equity futures on the S&P 500, negative here by almost 0.1%. Let's get you an update on stories elsewhere with your Bloomberg brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. Shares of Reddit surging in pre-market trading after the social media platform announced it will partner with OpenAI and its ChatGPT software. The deal would allow Reddit users to access OpenAI's chatbot feature while also letting OpenAI display Reddit content and giving it data access to train its AI systems. Financial terms of the deal were not disclosed. The new sports streaming bundle between Disney, Fox, and Warner Brothers Discovery has a name, Venue Sports. The joint venture was unveiled back in February, but no pricing or specific launch date has yet to be announced. Venue is set to combine ESPN Plus and the sports programming from all three companies' linear TV networks. And Xander Schauffele shot the lowest round in PGA Championship history to take the lead after the first day of golf's second major of the year. The 9-under par round of 62 leaves him 3 shots clear of the field at the top of the leaderboard. Rory McIlroy is in a tie for 5th with Masters champion Scottie Scheffler 1 shot further back in a tie for 12th. That's your Bloomberg Brief. John?
Yahara, thank you. Fantastic weekend of sport coming up. Plenty of golf for you in the final big weekend of the Premier League. Looking forward to all of that. Up next on the program, China's playbook under pressure.
There are signs that China is exporting its way to recovery. China's using the same playbook it has before to power its growth at the expense of others by investing in significant industrial overcapacity.
We'll head down to Washington, D.C. next, live from New York City this morning. Good morning.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
DOJ or other authorities.
Could face bigger challenges next.
Was going to keep reading World Cup. This is a 3
as the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
from New York City, welcome to the program. Bramo taking a long weekend. Danny Berger in the hot seat this morning. Equity futures on the S&P 500 shaping up as follows. We're negative here by 0.05% on the S&P. Yields are a little bit higher by a single basis point on a 10-year, 438.66. Under surveillance this morning, China's playbook under pressure.
Today, at a time when a strong U.S. recovery is underway, powered by domestic consumption and investment, there are signs that China is exporting its way to recovery. China's using the same playbook it has before to power its growth at the expense of others by investing in significant industrial overcapacity and flooding global markets with artificially cheap exports.
So here's the latest, right on cue. New data out of China showing industrial output rising faster than expected. Beijing also unveiling a rescue package to prop up the property market, easing mortgage rules and encouraging local governments to buy unsold homes for affordable housing. Bloomberg's Enda Curran joins us from Washington for more. Enda, let's talk about the plan. What is this plan and how big a difference will it make?
It's the most urgent step by the authorities yet, John, and this is what the sort of world has been waiting for. When would China take a turn on the housing market? What they're going to do is a series of steps that include, for example, making it easier to get mortgages, bringing down the down payment ratio, for instance. On the other hand, the PBOC is going to give about $41 billion to state-owned entities to go out and mop up unsold homes and try and convert those homes into social housing, for example. So it's a suite of steps to intervene in the housing market, and whether or not the actions will necessarily work or how long they take to work, the point is it does now speak to, it's the most material step by the authorities to try and turn around the housing market. We had data overnight showing that house prices continue to fall by their steepest actually in a decade. So it speaks to a new urgency, a new degree of intervention that the authorities are now trying to turn around housing. And remember, that sector is broadly between 20 and 25% of the overall economy's activity.
And this has been a problem for years. Why the urgency now?
Well, it's clearly a drag on the economy. You look at the data that came out overnight, which we'll probably come to. On the one hand, you have the industrial sector, trade and exports growing quite strongly, clearly propping up the economy, but it's also speaking to a two-speed economy because consumer spending slowed in April to its slowest pace in 2022. And remember, that was in the whole time of COVID zero and everything else. So clearly the housing sector is a drag on the economy, it's a drag on the recovery, and the authorities now recognise that, and they are trying to turn that around. Of course, it also helps them politically because remember, not just the US, but other countries have said China needs to stoke domestic demand, especially if they're going to mop up all of this stuff that they're making at home. Well, you can't have domestic demand doing well if your housing market's in a funk, and this seems to be an effort to try and at least turn some of that around.
Well, when it comes to domestic demand, Paul Donovan of UBS overnight says if the growth target is met through production without domestic consumption, China becomes more vulnerable to trade reprisals in a climate of rising economic nationalism. And he's saying whether or not these accusations are correct, the fact is the prejudice of politics is increasing around the world. Do you think if China remains on this track, we're going to see a lot more tariffs, not just from the US, but also Europe?
It's not a good look for the rest of the world if China is, on the one hand, going gangbusters on exports, its trade, industrial side is doing well when at a time when other industrial sectors, like in Germany, for example, are suffering hard. But at the same time, China isn't taking the kind of necessary painful steps to get its own consumer revved up by borrowing, spending more, and getting the consumption demand side of things revved up. So that is a potent political topic globally. It will be a topic at all of the global forums around the world, and it won't be just the US. We hear similar concerns raised by other key industrial nations, and that's why I think there are some optics in all of this. Of course, on the one hand, China is trying to rev up its own domestic economy and intervene in the housing market, which has been in the doldrums now for 2 to 3 years or more. But on the other hand, they can also use this at those global forums, say, look, we are taking steps, we are putting money on the table here, we are trying to step in to turn around our households and our consumers.
But Enda, if Anne-Marie, what she was referring to with Paul, if that comes to fruition, if we do see more tariffs coming from Europe, if the rest of the world looks at what China is doing and gets concerned, what is the impact to China? If we are talking about a two-speed recovery led by industrials, just how vulnerable is it?
I think China clearly is vulnerable to ongoing trade restrictions, ongoing export controls, investment restrictions, tariffs on goods and the like. But you have to say that overall, the economy in China's trade and industrial sector has pretty much shipped what has been thrown at it so far reasonably well, or at least better than expected. Remember, the industrial and export side of things was recovering this year, even under existing U.S. tariffs and various U.S. investment controls and the like. So there is definitely a channel for China to navigate trade tensions. The question becomes how complicated and how much harder will that be the more these tariffs and other restrictions mount up on Chinese goods. The US has obviously made their move this week. There will be a lot of interest and focus now, for example, in how Europe responds, especially when it comes to the new clean energy products, EVs, for example. What kind of tariffs, what kind of restrictions will they respond with on Chinese goods? So I would say, here to now, you'd have to say China's been navigating this okay, given what's been put on their industrial sector. The question becomes, what else is coming down the pipe, and how long can they withhold against that?
And let's finish on that. Europe, I think you've nailed it. That's the next big stop for this one. We've been asking for a number of weeks now. I remember this phrase someone used, who's going to eat the overcapacity? How do you make the Chinese eat their own overcapacity? And it's over to you, Europe. What are you expecting them to do?
Well, if you look at the Chinese retail sales last night, John, I mean, all of this starts at home. Car sales in particular were down sharply. So China itself can't buy the cars that it's producing. Those cars are going to go somewhere. And Europe right now is the open market for it. You're getting very mixed signals from the industry there, from car makers, versus the messages coming from, we'll say, Berlin and Frankfurt. So I think the European story remains very much an open book in terms of how it plays out, because it isn't unified, it isn't a coherent voice, say, like the US. But right here, right now, you'd have to say it's the best market that China has.
And Karen, thank you, sir. Down in Washington, D.C. on the big issues this week in the trade front. I think this is it, isn't it? Europe, front and center.
Europe's front and center because they're behind the United States when it comes to these tariffs. And you see the Chinese making real inroads in Europe. But Jonathan, we've been talking about a lot on this program, and Lisa will also question, what do European auto officials say in public versus what they say behind the scenes? BMW chairman says we shouldn't, hit ourselves by doing this. We shouldn't hurt ourselves because they want access to China's market. But how actually concerned are they? Because they are dealing with overcapacity.
And Mercedes saying the same thing. It's a struggle, I think, to believe them, Danny, that ultimately they want everything to be open in Europe. What's going to happen, do you think, with EVs in Europe if everything's just sort of wide open for Chinese competition?
Right. Well, BYD themselves said that they're going to overtake all of the European EV makers by 2030. The European officials are aware of this. They've talked for a long time about investigating China. But China's not doing itself any favors by having Putin there, someone who's talked about the dismantling of Europe. It's a tough sell.
I agree with you. Coming up on this programme, we'll catch up with Judy Norman of University College London on the divide in Israel over the future of Gaza. That conversation just around the corner. Equity futures on the S&P 500, just a little bit negative on the S&P. We're down by 0.02% from New York. This is Bloomberg.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Friday morning, treading water in the equity market on the S&P 500, going nowhere. We're doing okay on the Nasdaq. We're positive by 0.06%. On the S&P, the Nasdaq and the Russell, we're heading towards 4 weeks of gains. A 4-week winning streak on the S&P 500, the longest going back to early February. If we close there, if we switch up the board and get to the bond market, yields were higher, they were higher, and then they were lower for 3 consecutive weeks on a 10-year. We are down again by about double digits this week. We're up a single basis point this Friday morning to 438.86 on a 2-year, going nowhere, 478.84 at the front end of the yield curve. I want to turn to foreign exchange and talk about the euro. Danny, you mentioned Isabel Schnabel, executive board member over the European Central Bank, who said based on the current data, a rate cut in July does not seem warranted, speaking to the Nikkei newspaper over in Japan, that particular article published this morning. Danny, I wonder if that's sort of to get the hawks on board for a cut in June.
It very well could be, because Schnabel is among the more hawkish members of the ECB. I also wonder if it's an admission to some point, how much can we really cut when the Fed isn't? She's talking, of course, about the data coming in, but we've all sat around here and talked about the potential for real euro weakness if they start a cutting cycle and the Fed doesn't start cutting until 2025. To some degree, that must be part of her thinking.
Gilles Moek of AXA Investment Managers joining us in about 15 minutes' time with some strong thoughts on this topic, so don't miss that conversation. Under surveillance this morning, the higher for longer narrative taking hold at the Fed. Mester, Williams and Barkin all saying it may take more time than expected for inflation to reach 2%. Bostic saying he's grateful to see this week's cooler CPI print, adding it could be appropriate for us to reduce rates towards the end of this year.
He's grateful to see that, but how many more of those prints does he need to be grateful for there to become a trend and not bumps when it comes to inflation? When you look at Loretta Mester, incoming economic information indicates that it will take longer to gain that confidence. John Williams, I don't expect to gain that confidence just yet. We need to see inflation progress. Barkin, to get to that 2% the right kind of way, it's going to take a little bit more time. Time, patience. Hopefully, they seem grateful and hopeful that'll lead to the confidence, Danny.
At least someone is hopeful, Anne-Marie. Someone needs to be among us. I don't know, I still go back to this thing, you know, there's been this idea of why isn't the Fed reacting to the softer data we've seen? Because there has been softer data. But just take something like CPI. What that thing is capturing is everyday people, I don't know, buying milk. But whether you're Jeff Bezos or an everyday person, you're going to be buying a glass of milk. What it's not capturing is what we've been talking about the upper class still spending. But they're buying things like assets, real estate. That's not in the data. That's not in CPI. So we look at cooler CPI and say, why isn't the Fed moving? That has to be in part because of it. It doesn't capture that.
We talked about this yesterday. You used the word softer. Language is important. Softer, not soft.
Yes.
Cooling, not cool. The difference, I think the distinction is important, isn't it, when you start to see the surprise index roll over into negative territory?
Right, and at the same time, if it's just softer and not soft and the Fed starts a cutting cycle, it also reinvigorates this whole other cycle of financial easing. They don't want to do that until they're certain, because it has consequences.
Particularly after what we saw at the back end of last year into the start of this year, where equity markets ripped, credit spreads tightened, and you know the story. Elsewhere out of China, new data showing higher than expected growth in manufacturing manufacturing and exports. The country also announcing new measures to prop up the troubled housing market. The PBOC slashing the floor on minimum interest rates and down payments while encouraging local governments to buy homes. So let's go to the key complaint from Brainerd of the National Economic Council, the director over there down in Washington. China is using the same playbook it has before to power its growth at the expense of others by investing in significant industrial overcapacity. And then right on cue, we said it at the top of the program. What do you get out of China overnight? You get data that shows industrial output is better than expected and consumption is worse.
Consumption is worse, and it's going back to when China was actually in lockdown phase, which that spells that this is really bad when it comes to the consumer in China. Jonathan, this is going to be a huge story going into next week because you have the G7 ministers meeting in Italy, and this is what the Italian minister said. The world as we know it is finishing. Adding that, a trade war is underway, which reflects geopolitical tensions. They're going to be talking about these tariffs and this potential tit-for-tit between Washington and Beijing.
The US has made its move. Can the Europeans actually find agreement on something important like this and do something, find real consensus?
I think you know the answer to that. I mean, history would suggest that they struggle to do that. But John, you made such a good point. Where does all this overcapacity go? It goes to Europe. The Europeans have a real problem here.
The Europeans have a huge problem, and I think when you look at this Biden administration, though, they are really going to try to goad them to come along. It is going to be a push, push, push. Like we've seen with sanctions as well on Russia, they're going to push the Europeans to try to do more when it comes to China.
That's the latest on China. Here's the latest in the Middle East. A rift is growing in Israel's war cabinet. The defense minister joining former opposition leader Benny Gantz, pushing for a post-war plan for Gaza. Israeli Prime Minister Benjamin Netanyahu has yet to announce a path forward, despite growing international pressure. Judy Norman of UCL saying this: in the absence of any plan, the result would be a renewed occupation by Israel, which few want, or a resurgence of Hamas, as we are already seeing in the northern Gaza Strip, or even a more radical group. Julie joins us now for more. Julie, you've written about this. I know you've thought about this extensively. What explains Netanyahu's failure to articulate a day after plan? Is it because he doesn't have one, or he knows it won't be welcomed?
Well, good morning, Jonathan. I would say this has been a point of tension between the Biden administration and Netanyahu really since the start of the war. This inability or this unwillingness to articulate what some kind of day after plan might look like. I think some of that is due to the fact that there aren't many good options. Most in Israel do not want a reoccupation of the Gaza Strip. Obviously, no one in Israel wants a Hamas resurgence. The U.S. has been pushing for a sort of revitalized, as they say, Palestinian Authority, the entity that currently governs in the West Bank, having some kind of role. But that's where Netanyahu has really pushed back. He does not want to see the PA have a role, and that's where the main sticking point has been between the administration and Netanyahu on this, and where there's starting to be more open risk with Netanyahu and other members of the war cabinet as well.
Julie, how divided right now is Netanyahu's war cabinet?
I would say divided on some things, but not as much as it sometimes, I think, made out to seem. There's Netanyahu in the middle. He's being pulled further to the right by several members of the war cabinet who are much more outspoken about Israel really taking over Gaza and more extreme kind of measures. Bit more moderated by Gantz and some of the more moderate wing. But even most of those individuals are not talking about a two-state solution. They're not endorsing many of the long-term visions that, say, the Biden administration and much of the world would like to see. They are really focused a bit more on just saying, we need to have a plan for something in Gaza, and this needs to be articulated by the prime minister soon. But again, most are still very confident on continuing the war.
Gallant and Secretary Austin had a phone call last night, and they were talking about the progress of that maritime corridor that the U.S. has been working on to get more humanitarian aid in. Can you give us a sense of what the state of affairs are right now in Rafah?
Yeah, so the conditions in Rafah right now are extremely dire, I would say, going into what might be a major operation. So if people remember back in the early months of the war, many Gazans were encouraged to leave the north and go to this southern city of Rafah on the Egyptian border. So this has been the main site for most people who were displaced in Gaza. Over 1 million people have been taking refuge there. Now that the operation appears to be underway, Israel is encouraging most of those individuals to start evacuating yet again to other parts of Gaza. So these are people who have already been displaced once, twice, sometimes 3 times, trying to move yet again to a place that's not only safe from the war, but also has the humanitarian capacity to accommodate them. And that's just extremely lacking right now anywhere in Gaza. Israel, I think, sees Rafah as essential. They see it as necessary for not only ousting the last Hamas brigades, but also for trying to take control of the tunnel network that runs from Egypt into the Gaza Strip. But it's going to be a very difficult operation, and it's one that the U.S. and many other partners are very wary about the potential success from what this might look like, and of course the civilian implications as well.
Well, Julie, a lot of what the U.S. has said, and even Netanyahu has mentioned this to a point, that afterwards that Arab nations need to come together to rebuild Israel, but I'm Gaza rather. But I'm reminded of the Camp David Accords when Egypt did not want any part of Gaza. Is that really realistic, Julie, that Arab nations would come together, especially with the threat potentially of Hamas still there, and rebuild Gaza?
Yeah, it's a great question. And I would say this is where a lot of Blinken's diplomacy in particular has been focused in these past few months. He's been doing all this very crucial shuttle diplomacy in the region, and quite remarkably has gotten a tacit commitment from most Arab states in the region that they would support reconstruction in Gaza, but that would need to be tied from their perspective to some kind of plan for a Palestinian state, for a two-state solution. So this is the tension that the Biden administration has been working with. Netanyahu obviously is not endorsing a two-state solution. So it's this question of would reconstruction would these states still commit to reconstruction without that piece? And I think that's very unlikely. They don't want to see us coming in kind of riding on the backs of Israel, so to speak, after this war without that kind of guarantee of a move towards statehood.
Julie, given the fact that it's in the middle of a humanitarian crisis, what would that actually look like to have local Palestinians yet again involved in government? How do they build up that kind of political force at a moment where many folks are just struggling, trying to find a place that's safe?
Yeah, absolutely. I would say one piece that's missing from a lot of this conversation is local Palestinian voices, what people want to do, what they are able to do, and what capacity they have to do that. Obviously, just the day-to-day living conditions make that kind of organizing, governance, et cetera, very difficult. But obviously, people are hoping in a post-war context that would be a bit more viable. What I will say is there's obviously a lot of Palestinian support for a viable state. Hamas has obviously had control of Gaza for quite a while, but they are not the only actor that I think could lead in the future. But I think that future is still quite a long time away, and it's going to take a while to get there after this kind of war.
Julie, the risk was always clear for the Israelis. In fact, people warned the Israeli government directly about it after the terrorist attacks in early October, that their response could risk losing support on the international stage. We're seeing that happen. Do you see that loss of support on the international stage, particularly by some Western governments, influencing, being a factor on the ground to the decision-making of this government in Israel?
You know, I don't think so much, actually. You know, Netanyahu in particular, I think, feels he's used to, from his perspective, is feeling like the world does not support Israel and all of their, all of their operations and whatnot. I think the main actor that matters for Israel is the U.S. and some of the tensions that have obviously arisen between Netanyahu and Biden over this period, and especially when it gets to tangible elements like withholding aid. And we saw a brief pause on some of the military aid that goes to Israel from the Biden administration over this Rafah invasion in particular. So I think it's only when it gets really down to that level that there's a lot of pressure. But again, it's really more from the U.S. as this key ally. And I think Netanyahu's been very clear in his statements otherwise, saying, look, whatever the world thinks, we're going to go ahead and do what we think we need to do. And I believe that's been his mentality throughout and will continue to be as well.
Julie, as we get closer to the November election, how difficult is it going to be for this relationship, the U.S. and Jerusalem?
Yeah, I mean, obviously, we're already seeing it. This is obviously not what Biden wanted going into this last 6 months of the campaign, to have this open rift in his party over the war and then this increasing rift between him and Netanyahu. From the Biden administration's perspective, I think they're hoping there will still be a ceasefire, that there will still be a diplomatic solution. But as long as that is elusive, this is just going to continue to be, I think, a foreign policy issue that weighs quite heavily on Biden and will really complicate his ability to campaign effectively in places he needs to, especially around young people on college campuses.
We see it in some of the polling. Poll after poll. Julie, thank you for this morning. Appreciate your perspective. Julie Norman there of UCL. Let's give an update on stories elsewhere this morning. Here is your Bloomberg brief with Yahara Hackers. Hey, Yahara.
Hi, John. ECB Executive Board member Isabel Schnabel warned against back-to-back interest rate cuts in June and July. Speaking to Nikkei newspaper, she said, quote, based on current data, a rate cut in July does not seem warranted. We should look very carefully at the data because there is a risk of easing prematurely. As Eurozone inflation nears the 2% target, ECB officials are in agreement over an initial rate reduction next month, but have been wary of discussing what will happen beyond that. Dolce & Gabbana is being sued by a customer because an NFT outfit they spent $6,000 on to wear in the metaverse lost 97% of its value. The Italian fashion house is accused of mishandling their delivery of the NFT after the digital outfits allegedly showed up 20 days late. Plus, the customer said the NFT was only usable in a metaverse platform with, quote, barely any users. And English football's Premier League will come down to the last day of the season. If Manchester City beats West Ham on Sunday, they'll seal a record 4th consecutive league title. But if they draw or lose and Arsenal manages to beat Everton, the title will head to North London for the first time since 2004. The final round of matches kick off at 11 a.m. Eastern on Sunday. That's your Bloomberg Brief. John?
Yahara, thank you. Okay, I never thought I'd do this. I'm not going to talk about the football. Dolce & Gabbana's being sued by a customer because of an NFT outfit they spent $6,000 on.
I just don't understand how you can spend money for a luxury good but not physically have the good. It's
for
just
the metaverse.
It's digital, like a digital look.
And now they're complaining about it.
I was going to say, how do you blame Dolce & Gabbana for this? It's just you bought an NFT. You were left holding the bag like everybody else. That's not their fault.
Losing 97% of its value. My goodness. Okay. Up next on this program, the ever-patient Federal Reserve.
The FOMC remains fully committed to returning inflation to our 2% goal. Holding our restrictive stance for longer is prudent at this point as we gain clarity about the path of inflation.
They want more time. That conversation just around the corner, live from New York. This is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.